Morning, morning. It's freaking brutal. That's a beautiful play. This is moving like old school Tesla here. Tired. I'm tired. Didn't sleep very well. All of the above, Tim. Savage. Is it buying the dip moment still? I mean, do you ever stop buying the dip? I mean, really? Damn it. Wendy's. Gave it all back, huh? THIR daily kicking off here.
Howdy, partner.
Do we not? Oh. Cam, let's go 46 months, my man. MP is interesting. Nvidia heading towards that 180. I can reverse a stock, boys and girls. It's a beautiful thing. Going. Golly. It's a bloodbath. Oh, there goes MP. Come on, juice. MP's juicing. Thank you. Okay. How y'all doing today? How's the trading going so far? %, correlate. She's not gone yet. We gotta squeeze her for every last drop here. A little afraid to get in. That's the time to buy. Hot dog water. Fan-damn-tastic. What's crypto doing? MTC, big spike here. 100 shares? That's it? Oh, come on. Peloton? Is that juicing? This hood seems kind of crazy. Seems like a no-brainer down here, huh? Am I full port right now? Huh. Oh, I try to get this in the... This is a W on the daily here. Damn it. Izzy, this is your day, bud. This is your day, Izzy. Chipotle's getting destroyed. Starbucks. Another minute on MTC. About 20 seconds. Thank you, Vega. $277. I'll be right up near yesterday's close. It's gonna be 10-minute halt now. Looks like it. $357. Five-minute setup on Tesla here. Immediate bounce. What the hell? No, jeez. The hell was that? Bullshit, Phil. It's not dumping hard enough. I gotta get out. Prez, thank you for the sub. 3 months. Get that gold badge, buddy. Yeah, I mean, 425 big psych level, you probably have some sort of support through here. Wiggle room in Senate. All right. TTCK. What the hell? How did it gap up from here? Someone want to explain that to me? Halted down, gapped up? This thing is beyond weird. Jesse's World. BIVK. Copying Luke's moves now, huh? $25. You're in. Jesse's World. $11,725. We got 25 at 0.16. Boom, you're in. Oh shit. Jesus. I'm out of that. Who was that? Damn it. Does it tell me? Was I short? Tesla? Comes the recovery. Comes the recovery. Copying a thing. Big gamma down low. We'll see. We'll see what this bounce does. It's kind of weak right now. Do I look that tired? I'm so tired. I got a headache. Slept like I was being dragged behind a Mack truck or something. I need an energy drink. Yeah, how come your stupid AI ain't freaking making me shuck on some Red Bull, you know what I mean? That's just how I look now. What the hell? Wait, did I just pick December? What the hell? What? Uh, I meant to pick November. This was a play for earnings, but I got to figure out when their earnings actually is because I don't know offhand. E-Trade used to tell me, when their earnings are coming up. Earnings. November 19th. Well, I'm buying the 50 EMA. Ideally, we get lower Bollinger Band, but I don't know if that's going to happen. We bounced here last time. We did hit lower Bollinger Band there, though. You got earnings in, what is it, like 2 weeks? Yeah. That's the play. Is Thrar dead? No. Not totally. Dick halted again? Jeez. Watch this MTC. It's starting to do some stuff. If we can get a cuck right here, that'd be ideal. MACD starting to be down. Markets don't like that number, huh? Jeez. And it's gone. Market needs printer, yep. did you? Did it break? Oh shit, it broke. Thar is interesting. Flat top at $5. MACD's down. Oof. A rejection. Can you? Five being run. I don't like that. Oh, now it goes. Hold. Yes. I've fumbled this one so bad already. These fills. Oh well. If we can hold 5, it's probably going high day on this one pulled out here. Okay. Went Thar right now. Luke. I'll put an order out 5.
Thar.
This ain't no charity. RSP Green, keep it on watch for spy. Attaboy, Luke. Oops. Oh, look at that. You got a better fill. Attaboy, Luke. Luke Kong. 11, 7, 25. 1 at 487. I don't know if you're trying to get 100% move or just dick over Izzy. Either way, I respect it. I want to make sure I even got the right December trade here. Oh, oh, jeez. Yeah, I did. Got the right one. Said the kid. He actually got drafted really high this year, and rightfully so. He was like a top 10 player last year in fantasy. When Jensen announced that they are buying the China chips it made. Huh? Meta is still drilling. Like, what on earth? This is a big pivot level on Meta. I mean, it's clear as day. Psychological level. Just call it 600 even. Resistance. Broke through. Bounce. I mean, it's sloppy. Maybe I should make it a... Newegg juicing. Jeez. Let me go back. What is it? Was I just looking? Oh, Meta. Hey, you want to change tickers here, bud? Holy jeez. One day min here. Thank you, cheese. It's kind of what I had on mind with the video.
The lights went dim, but Stock Jock grinned. It's fine for him. He shorted the feds, went long on beer, declared, no work? Best week all year. While senators squabbled and markets
Damn
shook,
right.
he live-streamed trades from his breakfast nook.
That's right.
Shutdowns are bullish, he proudly claimed, then lost it all, but he's not ashamed.
I didn't lose it all. I didn't lose it all. I'm really liking this overlay. It's like Hekinashi, right? Yeah. But like squeeze indicator. It's kind of cool. I like it. Been playing with it. Oh man. Arching call, don't answer. Dicked, getting dicked. Oh, say it ain't so dicked. Is it finally its turn to become the Chinese shitter? Oh no. I loved playing this thing. I loved riding the dick. One minute. Yeah. What Cheese is talking about is the Menthor Q levels. If you guys are interested in that, that is, and it's like cheat codes. Menthor Q. Oops. Menthor Q. There it is. There's a link for it, 20% off. But if you kind of look at the old chartsy here, you have all these liquidity levels. Don't ask me how they are drawn or pulled or whatever. It's gamma based. But this is S&P 500 mini futures, and you can kind of see this 1 day minimum level right here. I think Fabio said like 90% of the time price stays between the 1 day max and the 1 day min. Fabicino, let's go. 16 month streak, 18 months total. So that's when she says 1 day min, he's referring to this level here. And it's pretty wild because it's very rare that price gets outside of it. And when it does get outside of it, you tend to get a trending move in a big way as the market participants try to catch up. You can kind of see it over here. Look at individual stock tickers. Let's load up. They have a free account as well. You can see NVIDIA hanging around here. If we get outside of this, it's going to get cooked, but so far, strong support through there. On stocks, you'll see a 1 day minimum intraday and a 1 day end of day minimum. So these numbers can be different. It's looking like Apple's going up now. Day under there. So it's another. Oh, let's look at Tesla. What was the number on the 1 day min? You know, I don't have the stream. You can see Tesla here. Got outside of it. Reclaim and retest the held, and now you're going up. On the ES, I'll put it in. I'll put it in chat for you. There you go. I DM'd you. I might as well put it in here. Arden. Yep. That's true, Cheese. Just like everything else, it's just a tool. It's not a perfect indicator. There is no such a thing. If you get more tools lining up, it gives you more confidence on a trade. All right, market might be juicing here. See, kind of a double bottom here on the 5-minute, breaking through this level. See where we head now. Keep leaning next week. That's right, jeez. Damn. GMAD? Did I remember this? They must have done a reverse split at some point. Oh, that was a nice compression on Kodak here. Not really sure why it's up, but here we are. MP might go. Compression. Seed chemicals. All right, Cheese. I want you to find the last time you mentioned Kodak to me. Okay. This freaking guy. Yesterday? I don't recall you saying it. You might have, but I didn't see it. Oh, that's a terrible fill. That's a really bad fill. I'll take it off there. 66. Watch you. Jeez. Watch you, Star Sympathy. P went high a day there. Coming back down. Tesla 1 minute. Well, the play this morning was Tesla holding 425. I don't know what that is. Jeez. I mean, and shit, I didn't even see this, but you got the lower Bollinger Band there on the daily. Like, stocks rarely break that, especially ones that are that salt. That would have been the play. I wish I was paying attention. I shorted it through here, but I wasn't looking at it on the daily chart. The 1 minute, it's a little. I mean, you might get a cuck and go here. I don't know. But it's just not like this was a cock and it didn't really do anything. So I got to wait for some extension. It is Friday, so I don't think we're going to really get a huge trending move. We might. I don't know. Keep good eye on watch. Gonna need a lot more seed chemicals. Okay, 1 o'clock yesterday when I was half naked banning Jesse's World's stocks and Pizza Wranglers. That's when you told me. Okay. No purges. Well, there might be. See, that's the thing. You all need to be on watch because there could be some purges today. I'm just not aware of them. I mean, there's literally over 100 stocks in this thing. Look at this. I don't even know what these are. So there could have been some reverse splits or whatever. Ooh, what is this? Nope. Anything? Let's see if anything's got news besides that. That usually tells us. No. Wendy's. Close restaurants. Earnings. At some point, when is Under Armour going to get bought? And nothing there. NVIDIA, no. ASPI. Oh! QLE has commerce and offering. Wait, what is this? Who's QLE? What's the drone company? You what? Mac, thank you. Talking about large drone purchases in the next 2 years. I don't know if this will hold. We might have a purge here. I don't know who QLE has used in it. Quantum Leap Energy. What is this? Subsidiary of. Okay, so that's not ASPI. That's their subsidiary. All right. Nah. Like we should probably be buying UMAC right now. We should be buying this on a 200-day moving average, $10 psych level. Am I right? We know that UMAC is going to get drone contracts in the future. We know it. It's the one that one of the Trump sons is on. Above one, 5-letter one. CGs. ONDS, RCAT. Over a dozen times. ONDS and RCAT. Gosh. I'm doing it. I wanted 10, but I'll take it here. I'm holding that one for a while too. I'm holding it. It's a 5-letter one. Oh, the OTC one. Yeah, find it for you, bud. KRKNF, Kraken Robotics. KRKNF. That one supposedly has ties to what is it, Anduril or whatever it was called. Anduril, yeah. I'm gonna ask ChatGPT about that. What connections does KRKNF stock have to Anduril? I want to see how much stake they got. Underwater drone batteries.
Here's a summary of the connections and caveats between KRKNF, the U.S. OTC ticker for Kraken Robotics and Anduril Industries. Known, reported connections. 1. Kraken Robotics develops underwater autonomy technologies, synthetic aperture sonar, deep-sea batteries, unmanned underwater vehicles, and has been publicly discussed as a key supplier of components to Anduril's submarines UUV programs. Seeking Alpha 2, analysts and investor commentary suggest that Anduril selected Kraken's tech, particularly its pressure-tolerant batteries and sonar, because of performance and integration advantages, making Kraken a proxy for gaining exposure to Anduril's growth in the maritime unmanned naval domain. Chitchatstocks.substack.com 3. Kraken has been publicly referenced in articles and investment commentary in the context of rising defense spend on autonomous systems and Anduril's manufacturing ramp-up. For example, Kraken's patented subsea battery and Anduril partnership fuel growth. Seeking Alpha. Anduril is the best partner for Kraken because it's fast, innovative, Seeking Alpha. Important caveats. There appears to be no publicly disclosed, detailed contract in many sources that enumerates the exact dollar amounts, volumes, or exclusivity of Kraken's supplies to Anduril. Some investor commentary is speculative about the scale and timing. Because Anduril is a private company, as of this writing, and many defense contracts are not fully transparent, linking everything definitively is difficult. The proxy narrative, i.e., Kraken equals way to invest in Anduril growth, is frequently repeated in retail investor forums and Reddit. For instance, one user wrote, open quote, Kraken is the primary public supplier for Anduril's underwater drone manufacturing ramp. Reddit. This is not the same as an audited or investor deck verified guarantee. Close quote. Investing in Kraken based on the Anduril link involves risk. Timing matters. When the production ramps, defense contract lags matter, technical execution matters. The narrative is ahead of full revenue realization in many analyses. Seeking Alpha. My takeaway. If you are evaluating KRKNF with the idea of it being connected to Anduril, here's how I would phrase it. Yes, Kraken does appear to have a meaningful technological and supplier relationship to Anduril's underwater autonomous systems business. But it is not guaranteed that this relationship will result in large, immediate, publicly disclosed revenue ramp, or that all of the upside is priced in. For someone like you, day trader, mark-to-market, ETF meta style, it might be worth monitoring. Announcements of contracts, production ramp milestones, or Anduril manufacturing ramp could serve as
Wild that it
catalysts.
picked up on that.
Also keep in mind that Kraken trades OTC, which may have liquidity, disclosure, and regulatory differences compared to large cap listed stocks. If you like, I can pull up specific contract filings, partner disclosures, and timelines for Kraken's work with Anduril, or UUV programs generally, to see how firm the connection really is. Would you like me to do that?
ETF meta style. That's wild, dude. Can we please? Nope. Gotta cuck it some more. Gotta cuck it some more. Yep. Yep. Holy cells. Freaking do it. Sold some so it would go. Should have gone. Market's not playing. Oh, no. Cock and drop. These down now. I'm out. Yep. Cock and drop. Of course it is. Of course it's a cock and drop. Why wouldn't it be? Thar. Why you do that to us? RAC. Mm-hmm. FTEL. Didn't you just buy it? Yesterday.
FTEL.
All right, you got 4. Oops. $11, $7, $25, 4 at 106. Boom, you're in. Amazon. Still flirting with this area. I like Amazon. Market's pulling back. Amazon's just sideways sitting on this 90-man on the daily here. If we can ever get out of this range market, start moving up, this would be a prime one for me to play. But right now, the overall market's not cooperating. Apple, on the other hand, does not give two shits. Jeez. The LTR clear support down here today at 170. Tim's going to go for that 40 level again, maybe. Probably more next week at 50 cents. Roger that. Tiva's holding up nicely today. DKYI going for the high day. This kind of shit you see when the market's having a bad go. Market is still, we're at negative 600 on the tick. It's not nasty. Here's a push. Nope. Focus then. About to find out how thin that book is, huh? Let it snow, let it snow, let it snow. MP, interesting. Waiting for this thing to go, but I got a sweet time. Check a bow wow. I was wondering where you were. Morning. wrong? That needs to flip. It ain't. Sure, I got that 5-minute right. Nope. Did not. It does not look like that. Why is that Kodak? Why is this Kodak? What am I looking at here? I took a trade on Kodak when I meant to take a trade on USAR. Holy brain fart. I was looking at this chart and I hit the buy button on whatever was on my screen over here. Okay. Shut up, dude. Shut up, Cosmo. We're professional. GSAT looking decent whenever this market turns. Yeah, and any of that tweak. I have a 5-hour energy I could go get. Feel like I need one. Wires are quiet. Yeah. They got real chatty yesterday when the market turned a bit. Yeah, 180 isn't a strong support, as in it will fight there. It looks like it likes to flush it, honestly. So I would expect a 180 break if we get there today and get some kind of flush. The question is, does it reclaim it? See all these wicks through that level here. It loves to play with it. Break it, broke it, broke it, broke it, broke it, break. I mean, it doesn't fight there. It flushes and then maybe reclaim. Short the market. It's got to go to 9 trillion for. How about that for a freaking bill? I sell some, it goes higher. Sell more, goes higher. Watch USAR for a sympathy move. It's a nice flat top break there. I needed a good trade. Needed it. Are we back to green on the day? Oh, yeah. Damn. Okay. No, it's dying. And my watch always says high heart rate. Oh, wait. What's going on? Blazing? Or worse than caffeine. Sweating like a pig, too. Blazing, are you like, okay, homie? Shut up, cheese. Is up good. Pre-market back 30% after open. Probably done. Yeah, it's a tough one today, Cosmo. The moves are certainly to the short side. So here's an example on breaking that one day min max whatever. We've now broken it. If it rejects, it could get nasty. I haven't retested it, but yeah. BKYI. KYI. Damn. But
BKYI, let's buy at the top.
I respect it. Giving you 3. Boom, you're in. I respect it. Jesse's world. No. 725. 3 at. What do we got? 135. If you guys haven't noticed, the ETF, meaning the S Viewer Fund and Retirement Fund spreadsheet is updated as of yesterday. So I don't have today's on there. The 100% leaderboard is not correct. Pizza Wrangler is now showing 4. Like, what? Do you count the purges against? Oh, we can't have that. I think that's what's happening. Because yesterday, I don't want that to happen. Yeah, Salt. I'm fine with that. I'm sure you are. So on the 100% list, Pizza has 9, but on here he has 4. Yesterday he had 7. But he got purged yesterday on something. I think maybe that's subtracting. Let's look here. All right, here's Pizza stuff. It's got 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, he's got 9. But he's got 1, 2, 3, 4 purges. I don't even know how the leaderboard's all jacked up. This ain't right. I'm sure Luke is enjoying it, but it ain't right. Where can I find a... Wait, what are you talking about? Look at Jesse. Is there a limit on tickers in the day, SJ? Look at Jesse, you're cheating. Not right now. It's unlimited everything. Everything is unlimited right now. Yeah. How do I? Oh, wait. There you go. So anyway. Yeah, I think the purge is subtracting from the 100%, which we don't want to do. Maybe it should do that. Nah, because we didn't say it would do that. I don't want to do that because we didn't say it would do that. How about make 2 lists? Make 2 lists, Saul. I'm sure it's fine. One with purging subtraction, one without. You put it on the same chart. I know you can't. Yeah, you can. You probably could. When you have to go back 3 spaces in board game, you have to go back 3 spaces. If you get purged, you get purged. Let's keep it. Do both. Do both. We never said that rule early. Yeah, let's keep it. Oh, we dethroned the king on a technicality that he didn't know about. Yeah, let's keep it, you freaking cheaters. I respect the move. Freaking cheaters. Yeah, look at Jesse and freaking Luke over there. Yeah, let's keep it. Let's keep it. Meanwhile, Pizza Wrangler ain't even here and he's getting dick sideways. His butthole's burning right now and he doesn't know why. I added all these rules for January. These rules don't apply now, besides the purge ones. And even those, you got grandfathered in. Otherwise, the lighting would be it. You lose the most money in the shortest time. Just sell the damn rings. It is interesting. SJ helps the random. Oh, for sure. But now you're changing the game mid-game. That random throw the shit at the board. Oh, gosh. If I do that, I have to allow people to sell. No. To sell their position, they don't get refunded anything, but just so they don't get dicked by an offering. One for once, be on Luke's side. Game has already changed mid-game. It was not! It was not changed mid-game. Sell the same as purge. Oh, it's not. It's different. Sell as an L. Moon or bust. That's what this thing is, man. Yeah, you can't play leverage stocks because I don't want to get feed into oblivion while the one share just gets reverse split into oblivion and I pay fees for that position while I hold it. Yeah, that's why we don't do that. Yet we have ETH because he was grandfathered in. But guess what? Once it gets reverse split, it's gone. Do you want to retire or not? Listen, I am retiring right now in the year 3182. Actually, that number is probably changed right now. We are down $500 in the account. And the closest one to 100% right now is a Tesla 2X bull play at 50%. I would say that the ETF, meaning the SVR fund or retirement fund, is probably putting me somewhere in the 3193 level now. Yeah, leverage bull plays are allowed. Bear plays not allowed. DGen stocks getting smacked. Smack it good, baby. It did dick go. Well, it's doing the dicking, that's for sure. I don't know where this started. Pre-market? I mean, goodness gracious. Want to attract real ticker with real value, you need to change the rules. Right now, it's just a game of picking shitters. Right now, I'm fine with that. There's no monetary reward, so to speak, or physical reward, I should say, attached to this. Do what you want, minus stuff that's going to cost me money. Like holding bearish bullshit. And, oh my gosh, this is literally a Chinese shitter. This is Chinese shitter.
TCK.
All right, fine. You know what? Fine. Fine. I freaking do it. I'm going to do it. I should label this as a Chinese shitter. You know that, right? I hope they reverse split today. I hope they reverse split today. Just so you know. Blukong. I mean, you guys are attracted to the most shitty of shits. I respect it. I don't have to like it, but I respect it. What we got? 2 at what? 187. No. The phrase is you can't polish a turd. That's the phrase. You can't polish a turd. Oh, jeez. And watch him. If he hits 100% today, I'm just retiring right now. I'm just never coming back. Too much shame. Luke didn't buy that? Oh, that was Talk Jock? I'm just so used to it. Talk Jock. Luke over here catching flack. Two at what I give him? 187. Huh?
Socks.
SOXS. This is a bearish 3x. No! Do you guys see this chart? This is why we don't do these things. Dragon. Shut your mouth. 3x bear. In the absolute demolition of semiconductor plays in the past 3 days, this has not done 100% move. It's barely done 25%. Pick something else. Chicka bow wow. Damn you. Fuck the rules. Damn, this market's gotten y'all going crazy here. Nvidia starting to push that 180. No, nay. Both of you. Go pound a doorknob.
SOXS.
What's the thesis on the Nvidia call? I think 180 now. Oh my gosh. None of you are getting SOXX. None of you. None of you.
SOXS.
Jesus. Freaking savages. Right. I should use your funds to buy some bond right now. That's what I should do. Go buy some bond if I can. join in, but then I'd have to pick something else. Yep. Yep. Let's go, Chicka Bow Wow. You're first. Pick something. Nope, there's your 180 break. Why am I not profitable here? E-Trade's just not keeping up with the fact. Look at this. This chart's completely frozen. It doesn't know what to do. XOM. DM News. Quantum benchmarking. I really don't want to play that. SPX. This is a 3x bear. No! $50 nuts. People park cash in it. I'm about to put it all on a freaking divvy. I was thinking about doing something real stupid, but I don't know how chat would go nuts on it or not. I was gonna say we're gonna average down on Nvidia today, and I would match for like a 5-minute span. I would match all the bits that would be given towards Nvidia. But that could get kind of wild. Or it could do nothing. I feel like I'd either be putting in $2,000 in this thing or nothing. I don't know how it would go. What do we got? How many viewers we got? 200. If everybody gave $5, it'd be $1,000. 100 on Nvidia.
NVDA.
Oh, so back to the Nvidia play. It was a 50. It was a 50-day moving average purchase, and it still might do one of these kind of wick moves. We'll see. Nerdy. Jeez, you're late on that quantum, bro, by about a minute and a half. I don't even know what I was saying. Oh, yeah. I was hoping for more support, but the market ain't doing it at the 50-day. It could still wick. We'll see. But now it has maybe lower Bollinger Band. On its radar. We'll see. BYND. Okay. Oh my gosh. All right. All right, getting 4, Nene. You're done. Good. Freaking savages. Nay TV. 11/7/25. 4. Type. 115. Boom, you're in. D nut. All right, you got D nut. You're in. Chicka Bow Wow. 11/7/25. 1 at 4:12. Now we're just not that one. Why? And now we're just waiting for Luke. So this is an example. You gotta love it. This is an example of what happens when that one-day min gets violated on any kind of stock. You tend to get a trending move in a big way as market participants try to catch up. There you have it. What's the ES doing here? Ooh, that ain't pretty. Ives. Oh, yeah. Go fake. Oh my gosh. Well, whatever. Then it headed to 175. I think it's headed towards that lower, unless we get some sort of news that really corrects this market today, or some big player steps in somewhere. You could be headed towards that 175, the 100-day level, and maybe next week lower Bollinger Band. Nvidia doesn't mind hitting that lower Bollinger Band, man. Skills of buying the top. I'm telling you, man, I could reverse some shit. Check out AMC downward wedge. Disgusting on the daily. Thank you, dude. It's only a 2-pointer, whatever you draw. But certainly not pretty, right? Igloo. Seriously, brother. How do we not know how to do this yet, boys and girls? I'm a freaking walking tutorial of this by now. All right. Look, this is your screen that you're normally watching with, blah, 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 right? Okay, let's scroll down so we don't have infinite viewing. You go down to the view or attack section, and you click on one of the items that you have, or, you go to your attacks. I'm sorry, you got to buy them first. You buy whatever you want, whatever. When it's during viewer attack, this is all free. I think you can actually click the viewer attack button, whatever. And in here, it says attacks available. You click on one, and then you click on this screen here, and this will show you where you're throwing it. You don't go up here and do it. No. This is the little screen that you throw it at. You click, and then you click. Click, and then you click. So anyway, that's what it is. That's how you do it. $12,000 customers had their flights canceled today under FAA required reductions. Damn. That's good. And we're still green? Explain that one to me. Golden tomato. Thanks for showing me how to do it. No problem. I can't believe you guys haven't figured out how to do it. They projected over 100K? Really? Jeez. In one day? There's 100,000 UA or AAL flights? Or yeah.
Mass attack.
Are you freaking kidding me right now? This is what we're doing?
2, 1.
How?
Mass attack.
All right, practice. Here you go. Get it out of your freaking system. Jeez. How do I do Mass X? Same way, Blazing. People affected, not flights. Roger. Thank you, Joystick. Good God. Look at all the shit on the screen and the hentai girls. You guys are disgusting human beings. Mutant Discord. Oh my gosh. Oh my gosh, I should have never shown you bastards how to do this. Too many hentai girls. Or is it not enough? That's the real question. Beta Chuck's giving us something here. I have no idea what he's saying. It's probably some kind of banger of a trade. Yeah, 10 more seconds or so. Get him in. Oh my gosh, that's not enough, hentai. Last ones, the buzzer beaters. Get the buzzer beaters in. Holy shit, you can do the clown during this time? my. Frando. Jeez. You'll take Hilly? What is this? Okay. I don't know why this up. Jeez. All right, you're in, Luke. Interesting take here, bud. Luke Kong. 11, 7, 25. 1 at 383. Is the clown available during that shit? Good God. Government open? No. Kodak, look, this is what I'm talking about. Picking some quality over Chinese shitters. Let's go, Luke. No one's following that, are they, Luke? That's right. No one's following that. Whenever you go over $5, it's people are very shy to copycat trade. That's right. 725. 1 at 720. 27. Bottom has to what? KULR? It'll never hit.
KULR.
It's a long game.
Has to be in. No chance this gets purged, right? Right?
And I getting a bump from TV. And of course it goes down when I buy it.
Cody K.
He followed in. Absolute savage. The spreads, jeez. I'm going to get dicked here. Yeah, no, well. Thought I was going to kill it. Nope. All right, I got 2 I got to get. KULR. All right. Jeez, this thing. Nay, TV. 11, 7, 25. 1 at what? 289. Then we got DePope following. Respect it, DePope. DePope. 11, 7, 25. 1 at 7. Even got a better price. That's funny. Can't believe they didn't hit. Oh well. Back to red on the day. Oh no, we're still green. Hell yeah. Shit. INTC coming up on CNBC talking about Elon potential partnership with Intel. Coming from Beta Chuck. Scuba, I think that even if there people know that something will be passed, the stock market will react differently. Things could get shittier economically, but the market is forward looking. You're in, Luke. Lower Bollinger Band buy. Okay. Pizza ain't here. Y'all are freaking loading up while Pizza's not here to copycat. One at 463. So there's our flush and reclaim that we were talking about on the video. Let's see if it can hold it down though. ORGO. All right, we're in. Chicka bow wow with it. All right. Man, this is a freaking crying shame. Mike Alfred saying he bought 50,000 shares of ASST. Didn't he just buy 50,000 shares? Guess this is a tweet. Here comes the volume from the tweet. Speaking of, wow, open reclaimed all of that, huh? That's wild. Speaking of ORGO, starting to juice a bit there. He's been buying 50K almost every day. Interesting. RNW Big Pop. Is there news here? Yep. $300 million deal. This is a $2.7 billion company. Renew Energy and Asian Bank Development for large-scale renewal. Okay. % drop as soon as I get in. Okay. Give it all back. Day. Whatever. All right. It's updated. All right, let's take a look. Oops. All right, so you got it in here. Are you able to do like per person 2 bars? So like 100% without deductions of purging, and then 100% bar underneath it with deductions of purging. So like 2 bars for the person. This one's still jacked up. Or no, maybe this is probably the 100. Just change the title, I guess, but I feel like this is the 100% minus purges. Roger that. Thank you. Thank you, Salt Life. Looks good. Looks good. It's all right. Print it out. Okay. I'll pen that right now. You got to give me a when, though, cheese. And the 200 matches it. Amazon really not pushing down at all. This is looking solid if and when the market balances. I typed your name wrong. Oh, I'll fix it. Oh, you fixed it. Thank you. I love when the markets tank. I mean, so should you. If you're under the age of 40, you should love when the market tanks. If you think to yourself, in my lifetime, we'll just use NVIDIA, for example, because it's down big past week, ever since I bought. If you think to yourself, in my lifetime, at some point, I think NVIDIA is going to break its all-time highs. Well, you're just getting a 16% discount from that. If you're under 40, you want as many famines, wars, market crashes, housing bubbles, dot-com bursts, mass hysteria as you possibly can. And you're going to buy those freaking dips. All right? Over 40? Probably like, I'm good for like one more or two more of these, maybe three, but like getting to the end of the rainbow here. But yeah, like you're not looking at your P&L if you're under 40 in your retirement account. You're still in the I'm adding phase. Oh, you're down 20% on a stock that everybody's going to use 10 years from now? I'm buying the dip. $50+. Lost on my mom days. I don't know if I'm 55, living in my mom's basement, bag haircuts, sitting for portraits of my depreciating asset. Well, she's especially weird attraction to the mail lady at my post office. I mean, that sounds like heaven. What are you talking about? Well, we probably should raise the retirement age for Social Security. I mean, it's either that or let it just, go insolvent. Oh, don't get me started on some boomers. And I'm going to go off on the boomers here in just a bit. I apologize for the boomers in chat. Hopefully you haven't ever said what I'm about to say. Let me get out of this trade, because I keep hearing it and I want to punch each one of you in the face that's ever said it. I'm about to go off. Gotta get out of this trade, though. Look at that. As soon as I sell, I set this thing off. Did you see that? It's like, oh, there's 2,000 shares of volume? Yeah. All right. I don't even know. Okay. This was my mom that said this the other day, and I just wanted to... She just like... That's what I wanted to do. I gotta stand. We were talking about how nothing's moving in the housing market. Like, yeah, well, no one's gonna freaking move right now. Interest rates are stupid on these houses. She's like, well, back in my day, these are actually normal interest rates, so we're totally used to it. I'm like, shut your mouth! what has happened in the past 5 years is not equivalent to your interest rates on a normal priced house 40, 50 years ago. And I can't tell you how many times I've heard that out of a boomer's mouth. I want to smack you all. There's a reason why.
Emotional damage.
Damn right. There's a reason why the median first home buyer age is now 40 plus and going up. And it's not because they're just not into buying houses. I can't tell you how infuriating that makes me. FTC's doing it. Back in my day, it was 8%. You know, that was just normal. Oh, yeah? Did you go through a period of time where inflation was at 12% for an entire year and then tapered off for the next 5 years with which is still high inflation? Did you go through that period of time? Because I don't think you did. Tommy fixed it. Well, that's what you're going to. You're going to get socialism in more and more places as things just get ridiculously unaffordable, and everyone is absolutely dicked by the current state that they're left in. So they're going to be like, well, screw it. If I can't have it, I want to vote it away from other people. That's what's going to happen. Can't shame it. It's good for. Oh no, hell no. U.S. will default. No, it won't. It'll just print more. Starting to juice here. Yeah, so that pisses me off. That pisses me off quite a bit. Did you tell your mom how Dirt and Rock are nothing are free? I know. And you have to buy water. Him's getting wrecked here. Capitalism is a socialism. I don't know if I agree with that. What we're doing in our markets, I wouldn't necessarily call capitalism when we subsidize left and right. Any kind of government involvement kind of screws the capitalistic side. Intel being bought, but yeah, that's certainly not capitalism. Capitalism would have let it burn, would have purged itself, or probably what would have happened was another company to buy them. I bet they had offers too. Say we are making is not letting the bubble burst. No. Yep. 100%. We have a forest that has a ton of dead trees in it, and we are just constantly dousing it with water when it's trying to burn the rubble down. You know, every good forest, a healthy forest, needs a fire every once in a while. Was Kodak? Where are we at on the day? $500. $19.87 is 8% yield. Yeah. What were your gains like during the bear market years? Well, which year? Pick one and I'll tell you. I had a really bad year 2 years ago. What was that? 2023. I did not trade well. I made like freaking $500. No, not that bad, but it was bad. I can't even remember how much I made. It wasn't a lot. It was my worst profitable year ever. But I don't think that was a bear year. No, it was. No, it wasn't. It's like the end of the year was bearish. It was just Chop City for most of the year. I did make up. Look at that gap. Jeez. How am I looking at PLTR? $2022, I did fine. It was 2023 that dicked me, and that was an up year. I don't know. This was fine. I think I can't go back that far to look. E-Trade only gives me 3 years. Typically, it doesn't matter the direction of the market for a day trader. We just need movement and consistent movement. Where am I trying to go? 3 year. It's probably the easiest. See, 2023, I made like nothing. 17 grand. It was my worst profitable year ever. Worse than my first profitable year ever. And then followed up with 2024. We did fine. 126,000. And then this year we're doing really good. 229,000. Back in your mom said you can own the entire bowling alley, not just buy old. You put time period custom and change date, or still stuck? To what? Like further than E-Trade. This is the only way to go backwards in time, by the way. Let me start at 2023. No, I can't click any of this. So it just gives me 3 years. Let's see, 2023, I made 16,000, 17,000. 2022, it was 100 something. 2021, I can't remember which one. Let's see, 2019 was 900K. 2020, I believe, is the 1.3 million year. 2021 was like 140, I want to say. I can't remember. I have my years wrong on that. Good, still juice, and you got this 750 up here. MTC still doing work. 5 minute for those that dare. What do you do to bounce back after a huge loss? I held too long and paid for it. Italian, I'm still. You got to look at it a day at a time. I'm still not at my all-time highs on the year. Makes any sense? So I peaked this year in July, and then I went through a drawdown, and we're just now getting back. Let me do this. We're just now getting back to that level, and it's emotional discipline. Through this section here, it's just emotional discipline. You don't want to. You know things have changed. You're trying to adjust. I went smaller size. I didn't do the greatest job. I still had big losses. My problem usually is when the market changes, I'm slow to adapt, and I still take the same size that I normally take during this when I need to size down, figure things out, see what's working, and then size back up after I figure it out. So that's why I drew down for like a month. We're getting back up there. We're 10% away. And this is why I don't keep a log just for me. I'm not against people taking logs of their trades or whatever, but if it overcomes you and it makes you emotional looking at it rather than a tool, ditch it. I don't keep track. I don't have a log book. I used to have a calendar where I would say Monday I made this much, Tuesday I lost this much, Wednesday, Thursday, and have it all in there thinking I don't know why I did that, but it became something I was obsessed with because I was red one day, I would try to make it back the next day, and I couldn't get it out of my brain. Even now, last week I took, on October 31st, I had like a $4,800 red day. And even now, I keep thinking to myself, have I made enough? I've had green days ever since then. But I'm thinking to myself, have I made it all back yet? And now I'm finally, out of the dip and we're back moving up in the account value. So it still dicks with me. But yeah. Tesla plowing here. Jeez. That 425 let loose. We're probably going to go low a day here. What is it, 40? I'll play that game. Go for a low a day, baby. Flush it. Too many buyers. Flush it. Yes. Do it dirty. Oh, couldn't break it. Where am I at? 53? Oh, it did break it. Shit. I didn't see that. Oh well. Good trade. Can we let AMD levels? Sure. AMD holding up pretty good considering. It's a big level here at this 225 psychological level. You can see the support there, resistance here. If that gets let go, you might be talking lower Bollinger Band. So XL still getting decked. No RGO. Very nice. Street saying long Peloton. Someone's selling into that street call. Get out. Didn't do anything. Where are we at on the day? 573. That's a swing trade, Cheese. It's a swing trade. That's right, Cheese. I'm going to show you how to make a profit on a option play. You got it? December 19, too. I went way out there, Cheese. And before you say anything, I'm going to take a potty break so I don't have to see it. Did I miss anything? Mother. I can't even breathe. Can't even breathe. Got me some beef jerky. There's your range break. Now VWAP. Calls on meta. Meta 600 was the level this morning. We talked about it right through here. Ivermectin cleanse. That's way by shit stocks. What? The hell is this? Dreaming of feet. Dream fat. Son of a. I was late to work. I got a prediction for you, boys. Where does SPY close? Over 665? Under 665. Soon possible. Okay. That's wild. What's wild about it? No time to vote. Oh, it was it set to 1 sec. It defaults sometimes. Let me delete that. All right. Sorry. Damn it. Hello. Over 665. Under 660. Give it 10 minutes. Get your bids in. Trump, there's something today? MP and USAR going. Try him. Day trading crypto? I mean, I could. There's enough here for me to eat on, though. One to 10? I don't know what for. Number 8. No, wait. 10. 10. We're doing 10. Whatever that is, we're doing 10. NVIDIA back at the 1-day min here. Really needs to get over that level and hold it. Otherwise, this is going to be a rejection. What price was it at when I entered? Way higher than this. I bought it around the 50-day moving average. So like 183.50. I know it turns you on to see me get red on an options trade. But don't you worry, Cheese. This one's going to pay for me. Just for the odds? What's it at? I don't know. Shut up, Cheese. See, the thing is, I know damn well you did the same thing. I know you got some kind of secret option portfolio where you're loaded to the teats right now. Where we at? Zero autos. I just got back from a good old poopy series, so I don't know. Bitcoin snitching on the Senate. I see that crypto move, man. Good God. That'll wake you up. I feel like we had some. Oh, yeah. We got a video to watch today.
Together, they need to feel a similar pain. They need to be united by something. Right now, we are in deflection mode by politicians, and we are able to kind of make people angry at one another because nobody has a shared enough anger.
Whoa, spooky season. There's nothing scarier than a boring market. Am I right?
Nothing scarier.
There's nothing scarier. Maybe
Where's the Maverick?
Maybe that CapEx on Meta.
Well, you should pull up Maverick. It's been a hot
I'm
minute.
dressed as a retail trader who doesn't know about risk management.
Jem had a little. He had a little costume he was showing us from the Star Wars universe.
This is we're going Jedi. We're going full Jedi today. Obi-Wan Kwasanti.
Yeah, there you go. Yes, you should be an Iron Condor or something for Halloween, man. A condor with just like black wings made of metal. Yeah, I'm sure the guys on the options trading floor in Chicago would love that. Eat that up. Oh man, it is spooky out there. Welcome back, everyone. With us is Jem Carson.
This is an older video.
Remember some commentary out by the
Bottom
FAA.
50%.
My programming note ticker VTR Victor
Just
Tango
carry
Run.
well under a Build Back Better bill that cuts, fiscal spending to those people.
All right, Cheza.
And sends it to the top 1%.
Yeah.
This one's only 8 minutes long, so we can hit a few today, probably.
A Build Back Better bill that cuts, fiscal spending to those people and sends it to the top 1%.
Yeah.
That's how it works. The lower income people will not do well if costs are going up, and those need to be passed on to them because things are getting expensive. This is not new information. This is well known and understood. It is what is driving the populism and the frustration. However, the top
Leaps? No
10%
thanks.
of the distribution now are more than 50% of all consumption. And that is the highest it's ever been. And if the market's up and their assets are making money, they are not the one, that cohort is doing well. And so this is more than ever, and we've been talking about this for some time, not a monolith. Like consumer is not a monolith. It is broken up into two very distinct parts. It did not used to be that way as much. It used to be, the masses would be the consumer broadly. But now, again, top 10% is more than 50%. So that's a big deal.
Why does it keep
One of my questions for
turning
you
off?
is whether or not that reflexive loop of liquidity is still alive and well today. I would say, I'm assuming that it is.
Yes.
And
Yes, it is.
how that could change, like what you would look for to change. But also with rates coming down in QT, like
Nice
coming
word,
to
real.
an end, it's just no end in sight, right?
Yes. Not only is the Fed now hopped on board, but the administration is going to have more and more power as we go into next year over the Federal Reserve. I would argue it already has a much more than the perceived power. I think they are strong arming those that are still not under their
Sugar, let's go 52.
I would argue. Some people would disagree. And so they're going to broadly bend policy towards what they want and eventually have full control. In that context, you've heard don't fight the Fed before. This is, I'm guessing, don't fight the Fed plus the Treasury working together without any friction is probably something you should also pay. What does matter is liquidity, as we've talked about. And the reality is that right now, sitting here going into November 1st, we have a bunch of things, a dramatic number of things that are very positive for liquidity. Never mind the Fed and the Treasury, which we've talked about. Just from a structural perspective, at the market's up 15%, $500 trillion of long assets, give or take, that's $75 trillion of new collateral. Some of it's been reinvested throughout the year, but a decent chunk of that goes to work on Jan 1. And everybody front runs it. This is a leverage machine, and $75 trillion of new collateral is a huge amount. The average amount that moves markets on a daily basis is $50 to $100 billion. It's like it's all just a very leveraged reality. And so if we're going to have, $7 trillion go to work on Jan 1, that probably is something that people understand that, and that's incredibly supportive, and people front run that. So generally that's positive, but when the market's up, that's even more positive. So that's good for things this year. The bigger the market is, the more that effect matters because it's a momentum machine.
Where did he say 7 trillion came from?
And that's incredibly supportive. Is a huge amount. The average amount that moves markets on a daily basis is $50 to $100 billion. It's like it's all just a very leveraged reality. And so if we're going to have, $7 trillion go to work on Jan 1, that probably is something that people
Seminar and hotel on the beach.
That, and that's incredibly
Sounds fun.
supportive, and people front run that.
Keep missing the part I want to hear.
$7 trillion goes $50 to $100 billion. It's like it's all just a very leveraged
Josh Brown on his
reality. And so $7 trillion go to work on Jan 1, that probably is something that people understand that, and that's incredibly supportive, and people front run that. So generally that's positive, but when the market's up, that's even more positive. So that's good for things this year. The bigger the market is, the more that effect matters because it's a momentum machine.
Tesla dealerships getting set on fire earlier this year as an example of just the rise in populism. And then you go on to say here, as AI's influence grows and the layoffs begin in earnest, the steady and growing populist drumbeat will soon upshift into a higher gear. The next target will not just be politicians. The impulse that will increasingly unite the angry hordes on the left and right will be the shared ire against the top 10 corporations in the S&P 500, which now represent a record 40% of the index's market cap. Expect an increased backlash and an uptick in global antitrust activity. I really like that because we've
like that.
Well, we've been saying that.
So does everybody else. That's the point.
Yeah, people's anger and stuff has been misdirected, and the politicians and the powers that be have been just putting on a clinic in how to manipulate the masses to focus on each other, to focus on immigrants, to focus on
same as it ever was.
Yes, and meanwhile, the real target should be fucking data centers and. I'm not advocating for that,
Trump
obviously,
said we'll talk
but
trade,
I'm surprised that we
energy,
haven't gotten
and
there
Ukraine
yet.
with Hungary's
And
Orban.
I obviously don't hope for any kind of social discord generally because I think that would be bad for everybody and people could die and whatnot. But I worry that we'll never be able to unite against a bigger enemy, and we're just going to be stuck.
Crisis. It takes a true crisis. It takes for people to come together, they need to feel a similar pain. They need to be united by something. Right now, we are in deflection mode by politicians, and we are able to kind of make people angry at one another because nobody has shared enough anger. But you're right. This ultimately is the real anger. It's not just politicians in general. And again, if you're saying politicians in general, it's easy to be like, it's not my politicians, it's your politicians. It's not my policy, it's your policy. But when it's corporations, guess what? Both sides are going to start. Right now, the left has been talking corporations, but the right has not. And what I'm trying to tell you is the more this gets to a point where people are losing their jobs, and not just to corporations, but to AI and the things that were built by corporations, and the economy begins to slow, particularly for the masses, which is what we're starting to see, which is, I think, has always been the main challenge. And if inequality doesn't get fixed, essentially, which, again, we were making some inroads towards it, but now we're moving back away from those inroads, people feel that viscerally, and that brings people's anger, their directed anger to other entities. So my
gaming events, what do you do, Boots?
Under the hood, we have seen it for some time. It is growing.
Oh, wait.
And AI
no, that's not Boots. It's Luke. Luke, what do you do?
Is beginning to become, and I think next year we're going to see an incredible accelerant to that.
Wait.
And I think that's something that people aren't paying as much attention to as they should. And I think what you will possibly see.
Members posted in the news desk, is it linked President Trump participating in a bilateral lunch with Prime Minister of Hungary
next year? And as we get towards the bigger election in 3 years, start to have enough pressure on them politically to start to point the finger at corporations as well. And if both sides start doing that, that's when you start getting antitrust and start getting policies that are very not pro corporations.
I agree with that. All right, what's another video I need to catch up on? Should we do a Maverick one just for old time's sake? I feel like we should. I feel like we freaking should. A Shea Gaming event. Let me see what I got here. Does he even do videos anymore? I thought it was all... Jesus, 40-minute video. I don't know if I could do 40 minutes. Just see where it goes. Oh, it's members only? Hell no. Oh, this one. The music.
If we get this right today, Papa will squeeze some of those shorts. And squeeze them hard. Not that I want to hurt him. Don't get that, please, because that's just not who I am.
That's just the Palantir. That sounds just like the Palantir guy.
I'm soft, I'm lovable. But what I really want to do is I want to reach in, rip out their heart, and eat it before they die.
That's the Palantir dude right there. That's Palantir dude all day.
Okay, there are two parts. You know, of course, when I hear short sellers attacking what I believe is clearly the most important software company in America, therefore in the world in terms of our impact, simply to make money, and trying to call the AI revolution into question, where we have this anomalous numbers, 114, rule of 40, et cetera. It just is super triggering because these people, they could pick on any company in the world. They have to pick on the one that actually helps people, that actually has made money for the average person, that is actually supporting our war fighters. Why do they have to go after us? And I'll tell you what, it's crazy motivating, because I'll tell you why the short sellers are constantly getting screwed by Palantir. Because every time they short us, we just are like tripling down on getting the better numbers. And part, honestly,
NPC, Marathon Petroleum, Kevin Simpson
and then,
on
by the way, with the shorts, it's very
Boyd.
complex. It's not even clear that, honestly, I think what is going on here is market manipulation. We delivered the best results anyone's ever seen. It's not even clear he's not doing this to get out of his position. I mean, these people, they claim to be ethical, but, you know, like, they're actually shorting one of the great businesses of the world. And I'm not against shorting as a matter of theory, but I'm just saying, pick something that is not doing a noble
Just
task.
don't pick us.
You know, it's us against them, and that's a good position for us.
Not against short sellers, just don't short us. Why me?
All right. Today's Wednesday, November 5th, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. And boy, oh boy. You know, my favorite headline of the year is this one. And it reads, "Why stocks are up? ? Nobody knows." If nobody knows, why the hell are they buying? And right there, you realize that we are in the most speculative bubble in history, and we're probably at the last inning of this bubble. It's not the beginning, as many try to suggest, because the rise of the stock market this year was not a result of the fundamentals or valuations or corporate earnings either. The reason behind the surge in the stock market this year is psychological in nature. What do I mean by that? When stocks went down because of the tariff fiasco earlier this year, a lot of folks who have not participated in the market in the last couple of years, they've been seeing and hearing their friends, some family members, people they know, bragging about their stock market gains are up 20%, up 50%, whatever ticker they throw at you. And a lot of folks were on the sidelines feeling missing out. And once we got that flush down, immediately began the urge and the desire to say, okay, this is it. We've missed it before. This is our time to hop in. And of course, it was a little bit scary because of the tariff situation. So they had to wait a little bit after the market bottomed and began to rebound and move higher again, until, let's say, around July in the summer, when they began pouring a lot of their money in just buying the stuff that has been working in the last couple of years, the AI stuff, regardless of the valuations, regardless of the fundamentals, regardless of everything really, even the macroeconomic situations that they live in and know. In other words, it's all about FOMO. And the question was, at what point does the market wake up to the reality of the divorce between the price action and the valuations, the fundamentals, and the prospects at the end of the day for this AI mania that we're seeing? And yesterday we got somewhat of a wake-up call because a certain famous short investor made a comeback, warning about valuations with a massive bet. Shall we call it the Big Short 2.0? And folks, let's begin the conversation right here. And here it is, in focus tonight. The Big Short, Michael Burry, is back, and he's back with vengeance this time. Yesterday, we got the news that the Big Short, Michael Burry, who famously, of course, shorted the real estate bubble back in 2007 and benefited from the crash that followed thereafter. He's been, of course, warning about this bubble for years, but he's been ignored. He's been called wrong, and a broken clock, and yada yada, because, again, we have this psychological phenomenon where they keep saying, oh, the doomsayers, the skeptics about this bubble are wrong and whatnot, but they're so insecure about it because they know deep down that the skeptics are right. So Michael Burry did what a lot of us have been doing. Okay, no need for us to talk to you at all. You do what you want to do, and then when the shit hits the fan, maybe we'll just refer you back to old videos so you can get your explanation of what's going on. But there's no need to talk to you at all. And the Big Short, Michael Burry, disappeared until yesterday when he made a comeback And we've seen the 13F filing where he has a massive short position using put options against two companies, Palantir and NVIDIA. Now, we've talked numerous times about NVIDIA and how the bubble is going to pop, led by NVIDIA at the end of the day. You can refer back to these videos, but his short against Palantir is what captured the attention because it was bigger than the short against NVIDIA. And of course, immediately, the low-life CEO of Palantir came out attacking Michael Burry, calling him batshit crazy. And he began defending his company and attacking the shorts just like Lehman's CEO back before the crash in 2008. And I apologize in advance to have to subject you to listen to this reptile again, because he's obviously coked up in like 8 o'clock in the morning, fidgeting and twitching and going nuts on TV. But we need to hear what he has to say and then dissect 3 important points that he talks about, and give you my take on it. Let's take a listen.
Okay, there are 2 parts. You know, of course, when I hear short sellers attacking what I believe is clearly the most important software company in America, and therefore in the world in terms of our impact, simply to make money, and trying to call the AI revolution into question, where we have this anomalous numbers, 114, rule of 40, et cetera. It just is super triggering because these people, they could pick on any company in the world. They have to pick on the one that actually helps people, that actually has made money for the average person, that is actually supporting our warfighters. Why do they have to go after us? And I'll tell you what, though, it's crazy motivating, because I'll tell you why the short sellers...
It's a little different. If you listen to him now and his interview, where was it? Where was that interview that he says that we want to snort cocaine off the backs of, or whatever he said along those lines, of the backs of short sellers, or whatever. A very different vibe. This is almost whiny, and his stock, he said before he said it, I think it was the stock was at $20. Now he just sounds like a whiny little bitch.
Getting screwed by Palantir, because every time they short us, we just are like tripling down on getting the better numbers, and part, honestly, to make them poorer. But okay, so the question of like the actual power of the business and what is it worth? I mean, at the end of the day, one of the things that is actually in the book, the biography, and that I actually think that you always have to ask is the person persuasive or are they right? And across all sorts of movements, political, I mean, you see this on the regressive part of the Democratic Party. We're about to probably have a complete disaster. I was born in New York. But if you actually said, do these things actually work? Everyone's like, of course I'm not going to vote for that. But instead they ask, does it work in theory? The theoreticians, you have to ask, how often have you been right? And Palantir is about pragmatic decisions that create unfair advantages for America and its allies. And on that, we've been right for almost 20 years on all major decisions, and I believe we'll be right going forward. Now, you could argue, I don't know, like they're constantly like, but they thought Palantir was overvalued at 10. They thought it was overvalued at 20. I'm not even here saying what the valuation is. I'm just saying find a company in the world that has a rule of 114, that has U.S. commercial growing at 121%, that aggregate growth in the U.S. is 77%, that has throwing off free cash flow in a way that's anomalous, and that is fully aligned with our customers. And you figure out the value, but they're in the business of being skeptical and being wrong, and we're in the business of giving an unfair advantage to American workers, American warfighters, and our investors.
So I got 3 points I want to comment on from Alex Karp's commentary. Number 1, he says that the shorts are skeptics on AI. They don't believe in this new, advanced, and promising technology. Number 2, he says that his company is a good company. Why do you want to pick against it? Number 3, he says, well, the valuation is up for grabs. I don't know what a good valuation is. So we're going to address these 3 points in this video. But before I begin, you have to understand that shorts have a critical role.
I think I found the other clip.
And their critical role is price.
Here, this is, I think, the other clip. I probably butchered it, but you'll get the gist of it. That was whiny Karp. Listen to this one. This sounds like a confident I'm gonna freaking... Yeah.
You're burning the short sellers.
I love burning the short sellers. Like, almost nothing makes a human happier than taking the lines of cocaine and away from these short sellers who, like, are going short on a truly great American company, not just ours, but just love pulling down great American companies so that they can pay for their Coke. And the best thing that could happen to them is we will lead their Coke dealers to their homes after they can't pay their bills. And that's like one of my...
Surely all short sellers...
Yeah, well, go ahead, do your thing, we'll do our thing.
Let's get down to Florida this morning, where our Sarah Eisen is sitting down exclusively with Palantir's Alex Karp.
Very nice to be here. Happy to be among the players.
Yeah, same here.
Smiles.
I want to talk about the stock for a moment. It
Swag
has
to
boomed,
him.
and you have seen a lot of growth recently driven by commercial accounts. Corporate customers. What's driving that?
That's the whole interview. We don't need to watch that, but you get the gist.
Price discovery. When price goes too high, out of whack, the shorts bring it back to reality. And that gives a lot of investors entry opportunities without overpaying for certain stocks and certain companies. In other words, shorts provide a reality check to the market from time to time to keep the valuations intact and keep bubbles from forming. The problem is, in the U.S. stock market, what we've done is we scared all of the shorts pretty much after the GameStop episode and all of the meme stocks and all of that. We've pretty much demonized short selling. And a lot of hedge fund managers, a lot of shorts pretty much stopped doing this practice. And the result is the insanity of the bubble that we see right now. Look no further than foreign markets, where we've seen cycles of booms and busts. The Chinese stock market, for example, where they banned shorts. In the early 2000s, the stock market crashed by over 70%, and it has yet to recover the highs from those years. You look at the Saudi Arabian stock market back in the early 2000s. Again, no shorts, no regulations, and we see the stock market going bananas, moving as high as 1,000%, and then crashing down by about 80%. And it never recovered the highs from that mania. And there's a lot of pain with these episodes, by the way. A lot of folks begin to chase, especially at the end.
If some president or some administration ever bans short selling, that's what we expect, huh? You mortgage the house, you ride the wave until there's no one left to buy. And then it just gets the momentum the other way. And you retire right here.
Of these bubbles, when FOMO becomes the primary driver for investing, and at the end of the day, when the crash happens, a lot of folks feel a lot of pain. They lose their retirement money. They borrowed money from family, from retirement funds, and they lose it, and they never recover it. So there's a lot of pain with that, and shorts play a critical role in making sure the bubbles don't form in markets. But as I said before, here, we've demonized short selling so much that the shorts are now pretty much out of the market. And what happened is this. You look at the Shiller PE ratio in the past 100 years. The valuations right now is at the highs that we've ever seen, only surpassed by the 2021 mania, which was followed by a bear market in the year 22. And a lot of stocks crashed and never recovered. We're now trading at territory in terms of valuations that surpasses the bubbles in 2008, in the dot-com mania, and even prior to the crash in 1929. Why are the valuations so stretched when you have, if you look at another valuation metrics, the Cape Fear, the projected 10 years annual real returns for U.S. large growth, it's actually negative. So why are we fluffing up the valuations this much? The answer is, it's FOMO. It's the public being desperate because of this inflation that we have, and they see other folks making money in the market and bragging about their gains, and they want to have a piece of that. And it becomes a dopamine rush every day where if the market, God forbid, goes down 1 or 2%, you see depression. You see folks shocked, dazed, and confused. Why is the market down? As is the market supposed?
That is so true, though. Anytime we get a 1% pullback, 0.5% pullback, we got people coming in here, 400, 500 viewers. Why is the market crashing?
Supposed to be going up every day. And when valuations are divorced from reality and the actual fundamentals of the economy and companies, these episodes can last, but at the end of the day, they always end up in tears. And the higher the market goes, the bigger the mania, the bigger the crash that comes after. And by the way, Mr. Karp, if you're listening, first of all, why don't you go fuck yourself? That's number one. Number two, you're attacking the short sellers. What is shorting? Shorting is selling shares at a certain price and then buying them back at a lower price. And you get to make the difference as profit. You're doing the same thing. Mr. Karp, you've dumped billions of dollars worth of shares of your own company, Palantir, and you continue to dump hundreds of millions of dollars even this year. So are you not a believer in Palantir? Shouldn't you be buying stock if you're coming every day on TV and hyping up the future of Palantir? You should be buying stock, not dumping. Or is this all a pyramid scheme for you where you just sit there and you do the marketing and the hyping and the pumping, and you hope that retail investors pour their hard-earned money in chasing this mania, and you keep dumping hundreds of millions, if not billions of dollars, making yourself richer. And at the end of the day, when the crash happens, these investors lose their money. What do you give a shit? You've already made your VIG. Is that what it's all about, Mr. Cobb? But let's go back to the substance of this video here, the 3 points that I want to address from his interview. Number one, when he accuses the shorts of being skeptics on AI. No, we're not. Nobody, no bear, no, even the big short, Michael Burry, I'm sure if you talk to him, he's not really a skeptic of AI. If anything, he's probably using AI, and he's pretty bullish on the technology itself for the future. What we're bearish against, what we're picking against, is the hype and the overvaluation. By definition, because a lot of folks say, oh, shorting is un-American, you're betting against U.S. No. By definition, capitalism, what does that mean? Well, part of it is if somebody makes a mistake in terms of valuations and they hype certain assets to prices that don't make sense, then there is an opportunity to capitalize on. That opportunity is to bet against the price action, and it's going to be corrected to reality at the end of the day. So short selling is as American as apple pie at the end of the day. And just like the shorts in the 1990s and early 2000s, they were not really skeptics on the internet. Everybody knew and acknowledged that the internet is transformative technology. It's going to be the future. But the hyper speculation that happens in the early days of the introduction of any new technology is usually misguided, because you have companies pouring money and investors pouring money, betting that the first shape or the first initiative of a certain technology is going to be the final form. At the end of the day, that's not the case. And the same thing is happening in AI right now. It is transformative technology. It's going to change the way we live and how we do business and a lot of aspects of our lives. But is what we're doing right now in terms of over-investing in data centers and in chips and hoarding all of these equipment and betting it all on AGI, is that really going to be the final form of AI or the final use of AI? You look at these companies, the most valuable companies in American history, the most valuable companies in the world right now, the companies that are in every retirement portfolio, not just in the US, but globally. That's the danger. And they're spending like a drunken sailor. They're expanding their CapEx to levels that we've never seen before. And that's keeping the stock market up. That's keeping the GDP up. That's keeping the economy still afloat, while underneath it all, the fundamentals are absolutely horrific. Why are these companies spending so much? They're draining their cash reserves. They're getting into debt now. These used to be Amazon, Meta, Microsoft, Alphabet, used to be some of the leanest companies that we've ever seen. They produce a lot of revenue with little cost.
Watch MTC 5-minute cut and go
benefiting
potential.
A lot of retirees for many years. Why are they now spending this much, getting into debt, and damaging their own fundamentals? Are they overbetting? That's the question. And the reality is there's a lot of psychology behind it. These companies, Amazon, Microsoft, Meta, Alphabet, it's monkey see, monkey do. If I don't hoard the chips from NVIDIA, well, Amazon is going to do it. If I don't build the data centers, Microsoft is going to do it. If I don't hoard the servers, then Alphabet is going to do it. And maybe the company that's going to invest the most right now will be dominated.
293 break would be it.
In the future. It's FOMO. It's fear. That's why they're spending all this money to build AI, generative AI, data centers with billions and billions of dollars, and they're putting all of their eggs in one basket. We're saying that they're going to be wrong, that they're doing damage to their own companies without even knowing what the final form of this technology is going to look like, or what the final demand from the end consumer is going to look like. That's what the shorts are betting against, Mr. Cobb. I mean, look at this circular financing that we see right now. There's nobody really paying for AI. The consumer is broke, and all of this spending is happening between these companies. And you can see the inner web of circular investing where NVIDIA gives OpenAI an investment. OpenAI uses the cash to buy chips from NVIDIA, where there's no organic creation of revenue here. You're giving them money to buy your chips and cook the books to show that as revenue, when there's no legitimate growth. Organic growth, and we see it all over the place.
I expected better. It still could go, but
Oracle is getting a lot of debt right now based on
I really want to see that 295 hold.
OpenAI is going to buy shit from them, and OpenAI is not even a public company yet. It's not proven yet, and they're losing money. So all of these companies, large companies in every retirement portfolio, are betting billions and billions and billions of dollars on this one company, OpenAI. And the reality is, even OpenAI is losing market share. It's not proven yet. It's not defined in form. We're going to have competition from all over the place. And when it comes to the enterprise level, you can see that OpenAI in just 2 years lost almost half of their market share to a new company called Anthropic. And there could be many more. And at the end of the day, OpenAI could be just controlling about 10% of the market, 15% of the market, and all of this promise, all of this hype and valuation in companies like Oracle, NVIDIA, Microsoft, because OpenAI is going to do this and that. At the end of the day, maybe OpenAI is not going to live up to its obligation. That's what we're betting against, Mr. Carp. And today, the big kahuna NVIDIA, the CEO, Jensen Huang, threw a nuclear bomb. He came out saying that China's going to win the AI race. And I told you that ahead of time, by the way. If you've been watching and following my channel, I told you that ahead of time. The pin,
cheese is
the AI bubble in the U.S. market
confirmed.
Is China. China has the lethal weapon right now to make NVIDIA obsolete. They're not going to reveal it yet. They want all of these U.S. companies to continue to spend, exhaust all of their resources. They say, surprise, all of these investment, the billions, the trillions you spent on doing this expensive AI and data centers and fancy stuff. Well, we're doing it now better, but we're doing it efficiently. And DeepSeek was the appetizer. DeepSeek was the warning. The Chinese are going to catch up, and even NVIDIA's CEO now admits that China's going to win the AI war. So why are we hyping up the valuation of all of these companies? We know that the Chinese are probably going to gain significant market share against these U.S. companies. And we're already questioning the narrative, by the way. Just yesterday, we got earnings from company Supermicro, which is providing a lot of servers for these data centers. The stock went down big. Its sales were down, earnings not looking good, and the stock went down by almost 10%. So the narrative is beginning to crumble. The narrative is beginning to be questioned. And when you look at who's the end consumer at the end of the day, what are they building all of these AI data centers and spending billions and billions and billions of dollars? Is AI going to do the consumption at the end of the day and buy shit from them? Of course not. It's going to be the consumer, the human consumer, that they want to fire. They call it efficiency and replace them with AI. Well, who's going to do the spending if the consumer doesn't have money and jobs anymore?
Yeah,
and
the
by the way,
question.
have you looked at the reality of the economy right now? What are they building all of this shit for if the consumer is looking weaker than ever? You look at U.S. consumer confidence, it is dropping like a rock right now. It's actually lower than the pre-pandemic levels, whether we're talking about view of the current economy or future expectations. If you look at wage growth, used to be rising, keeping up with inflation in the aftermath of the pandemic. Now what we see is wage growth has stalled. And for the lowest earners, they are actually falling behind. We see a lot of delinquencies all over the place. Auto delinquencies, credit card delinquencies, student loan delinquencies. And now we see the delinquency rates matching the pandemic when folks were losing their jobs. The state of the consumer is not doing pretty good. Today we got earnings from McDonald's. And McDonald's is now warning that the low-income consumer is not holding in this economy. They have to lower the prices.
This is Maverick of Wall Street.
With value meals, which by the way lowers the company's margins because the consumer can't afford it. Another warning that came out last week is from Chipotle. The company's shares been going down and it plunged hard last week because sales are collapsing. Why? Because the younger consumer, their main consumer, doesn't have the money anymore. They can't afford to go out and eat at Chipotle. They can't justify that kind of spending. If you look at the shares of CMG Chipotle, the weekly chart, it's been collapsing and it peaked in 24 and it's been going down since then. You see a lot of economists, a lot of experts, they don't look at the price action of the stock market and make economic conclusions. And that's a big mistake. But this stock right here has been screaming for a while that the consumer is in a bad shape and stocks will move first. Then you're going to see the economic reality later, the reflection. And just after the bell today, we got a company that caters to the Gen Zers and younger consumers, Elf Beauty. Shares of that company plummeted by more than 20%. What does that say? There's a problem in the economy. There's a problem in the consumer. You look at the divergence between the S&P 500 consumer staples, these are the consumer stocks in blue, and the S&P 500 that is pretty much heavily weighted by the 5 or 6 AI stocks. There's a massive divorce here and divergence. As in to say that we have one economy where these companies are spending among each other and pushing stock market valuations higher, but the reality of the consumer is they're broke. The middle income, the lower income consumer, they're pretty much gone. And some would wonder, well, if that is the case, how come we're not in a recession? The reason behind that is the top 10% of earners do over 50% of spending in the economy. And these top earners happen to be also investors in the stock market. So they were influenced via the wealth effect, quote unquote. That means when stocks go up, they feel wealthy and they begin to spend in the economy, evident by their spending in travel, leisure, hospitality. And we've seen these stocks going up. We've seen jobs in these sectors going up. So while the lower and middle-class consumer has been suffering for years under the stagflation, the economy held because the top earners, the owner class in the stock market are doing okay in their spending. That's keeping the economy intact. They're influenced by the price action of the stock market. But now we're getting a new warning that even the affluent consumer is now beginning to feel the pain. I tweeted this yesterday. I said cruise stocks are crashing, premium airline reversing, and high-end resort hotels topping. A leading signal that even the affluent consumer is about to get effed. Look at the crash that we got in Norwegian cruises. The stock went down big by double digits in a single day. Look at a stock like Royal Caribbean. It's been heading higher as the affluent consumer booking cruises and traveling, and now it's crashing hard all of a sudden. Look at a stock like Live Nation. Concert ticket prices are absurd. Only the affluent consumer in the economy can afford them. So this stock been going up and up and up, but recently crashed hard.
5-minute HTZ.
These are all warning signs, leading indicators that even the affluent consumer is getting hit, and they're about to change their consumption habits. Look at DoorDash that we got after the bell today. The name is down over 9%. Who's spending on DoorDash, paying $50 for delivery from McDonald's? It's the rich. Rich kids in Manhattan, too lazy to go down, order from DoorDash, and who gives a shit? You're paying $50, $70 for a food delivery, they don't care. But now all of a sudden, budgets matter. Why? Because a huge component of the affluent consumer are tech workers. And with the recent news that we got from Amazon, laying off 30,000 employees, Meta is about to lay off tens of thousands of employees, UPS getting rid of 40,000 jobs, IBM, and many more companies getting rid of thousands of jobs, replacing them with AI. All of a sudden, these tech employees who are making $300,000, $400,000 a year.
Shut up, Zach. I'll ask for your feet pics if I want to.
Lose my job? And if that is the case,
Zach, you and I freaking going punch for punch this week.
Take a loan to buy a new car or a new home. And if the affluent consumer stops doing spending, then what is the use of AI at the end of the day? Just to replace jobs? Is this
ridiculous? Of course.
Investing in, building all of these massive
we are second and third as far as overall points on the weekend. Of course, we're fighting each other.
If the consumer, lower income, middle income, and now the affluent consumer getting
horseshit. This happens to me every week, by the way, for like 3 years.
Karp says that folks who are shorting his stock are skeptics on AI. That couldn't be further than the truth. I just explained to you that there are legitimate problems with the AI narrative and overhype. And that's what the shorts are betting against. Now, that takes us to the second point. When he says, why don't you short something else? Why do you short such a good company? Is it really a good company, or is it an evil company with the blood of innocent children on its hands? We can talk about the history of Palantir, what it actually does, but I highly recommend that you listen to Whitney Webb. She's the author of One Nation Under Blackmail that investigates the Epstein saga, and it's mind-blowing when you realize that this nation is not really independent or free. It is infiltrated and it's owned and controlled by a selected few who manage to compromise our politicians, our presidents, our business leaders, and hold them under blackmail. In a nutshell, Palantir, what they do is prediction algorithms. They're going to infiltrate your social media. They're going to infiltrate your phone,
oh, you mean the green one? You mean the green one, cheese?
Shop where you dine and create a profile on you. And then they're going to predict, are you a security threat? Are you about to do a shooting or hurt somebody? And who knows how the hell these algorithms come to these conclusions. Next thing you know, Palantir algorithms deem you as a security threat, and you have a SWAT team knocking at your door, getting snatched, arrested, interrogated,
956. Let's see what NVIDIA was at.
Liberties all violated. It's pretty much a software that creates the surveillance state, and either you're an obedient citizen who follows the rules that they give you, not the constitutional rights, or Palantir will flag you as a security threat, and now you have no rights at all. You tweet the wrong thing, goodbye. And who's going to determine what the wrong thing is? In a country where we place the freedom of speech as one of the most valuable rights that we have. And this is perhaps the most important part in all of this. Take a listen.
But it's about pre-crime. It's about predicting stuff before it happens, and that's what I think a lot of people miss about Palantir.
than when I bought it.
People say about
this would have been break even. This is my break even spot.
But it's not about if you're doing something wrong now or not. It's about an algorithm thinking if you will do something wrong in the future.
I think I would definitely be on that algorithm. I think you would be as well.
Well, the problem is that pre-crime has been inching along, and actually a lot of people in Epstein world, I mean, obviously Peter Thiel and Epstein had a relationship. More came out about this earlier this year
pound doorknobs,
after, Thiel kind of tried to minimize his ties a few months earlier. But Peter Thiel's Founders Fund co-invested in this
interesting
company,
5 minute again
with Epstein and Wexner and Ehud Barak called Carbine. That basically had a pre-crime component to it, and Carbine has now colonized an insane amount of 911 emergency call services systems like throughout the U.S. and are the main company at the forefront. If this legislation in the U.S. is passed, it's called Next Generation or NG 911, where they're going to basically federalize and centralize all 911 emergency call systems.
So again, a lot of folks would say, well, I don't have anything to worry about. I have nothing to hide. So if the government wants to use Palantir to spy on me, look at my search records online and what I post in social media, what I do in my life, that's okay because I'm not doing anything wrong. That's what you think. But then what does Palantir think? What does Alex Karp think about your behavior? What does Peter Thiel think about your behavior? That's what's going to dictate whether you're a good person or a bad person in the eyes of this AI technology from Palantir. In essence, it is designed to destroy the constitutional rights and the civil liberties in this country and change it into a police state where the citizens are intimidated to be under good behavior.
It could be Stream Elements.
Else. And the way they do it is they divide us.
A little bit.
So right now we have a Republican administration. So what they do is they say, oh, our Palantir algorithms are just used to catch the terrorists and the bad guys, the Antifa, whatever. But don't forget that under the previous administration, they called school parents terrorists. So if they abuse one side of the population, they'll abuse you too. It's just a matter of time. So is that really a good company? I don't think so. Furthermore, she brings up the point of Peter Thiel, one of the founders of Palantir, pretty much being blackmailed in the Epstein saga. And that is evident because when he's confronted that, hey, you guys at Palantir sold software technology and AI technology to the Israeli military, who used that technology to kill innocent children. When he's confronted with these kind of facts, all of a sudden Peter Thiel just malfunctions. Take a look.
Look, I'm not, without going into all the I'm not on top of all the details of what's going on in Israel because my bias is to defer to Israel. It's not for us to second guess everything, and I believe that broadly the IDF gets to decide.
See where you trolling me? It's right here.
And that they're broadly
December 19, 20.
Right, and that's sort of the perspective I come back to.
And honestly,
December 19,
$200
calls.
Bullets. The guy sweats profusely. There is no harder worker than Peter Thiel's sweat glands. But you know what I think? I think this guy's not a human being. I mean, he doesn't look like a human being. He looks like a reptile, a lizard, and he's using a wax human being mask. That's why he keeps sweating and melting all the time. So look, I tweeted this and I said that shorting Palantir, number one, is patriotic.
Okay. Right, fair enough. I don't know, Siru. I can't see your shit.
Again, I highly recommend. Even if you disagree with me, even if you think that Palantir is a good company and it's good for our national security, and Alex Karp is actually a good human being, and Peter Thiel just wants
Do I know what Maverick looks like?
At the end of the
no
day,
idea.
Even if you believe all of that,
Not
do
interested.
yourself a favor. Every American citizen needs to do this.
Crypto
and
still
listen
juicing.
to Whitney Webb talking about Palantir. Just take a listen and then do whatever you want to do. Whatever opinion you got after that, but at least know some of the facts. Number two, I say that shorting Palantir is humanist for all of the innocent kids that Palantir helped to slaughter. Now, are the shorts really shorting Palantir or any other company because of these values? That, oh, I want to be patriotic, I hate what they're doing to our constitutional rights, or I hate what they've done in foreign wars? Not really. I mean, maybe if you have billions of dollars, you don't mind losing billions or millions of dollars just to make a point. Sure, maybe you'll short because of these values. But these are cherry on top. That if I get into a short in a company that is evil like this one, and I get it right, and the company's stock crashes, then that's just a cherry on top. But at the end of the day, shorts enter these positions based on fundamental reasons. And that leads us to the third point I want to address from the interview with Alex Karp. He says that the company is doing pretty good, and they said that Palantir is overvalued when it was at $10, and they said it's overvalued when it was $50, and now they say it's overvalued. I don't know how to value the company, but you heard what he said. So let's talk about valuations, because that's one of the reasons why shorts enter these positions. It's not because they hate the company or they don't believe in AI. Palantir provided this. They reported earnings this week, and you can see that the quarterly revenue growth year on year is impressive. The company went from a 30% rate of growth in revenue in Q3 24 to the latest quarter a year later, 63% rate of growth in revenue year on year. Nobody's questioning the growth of Palantir. Of course, listen to Whitney Webb. Palantir CEOs, the Palantir Mafia, Peter Thiel, all right now have huge influence in the
WKUI, Big Pop.
And they're convincing the government to do contracts with Palantir. And that's causing the revenue to explode higher. What is the problem then? The problem is the stock performance right now and valuation reflecting this growth or exceeding it based on psychological hype and stampede by investors just to chase the price action.
Look at that 5 minutes playing off of whatever this is.
Stock market, the performance of a stock is reflective of the growth of the company. So if you are a growth investor, you want to look at the growth in revenue. So if a company does in a year a revenue growth of 40%, the stock should be reflecting that by moving up 40%. Maybe you add a little bit of a premium on top of that, the stock goes up by 50%. Now, in companies that are not growth companies, established companies, you measure the profitability.
What are we
doing
here?
The profitability of the company goes 6% in a given year. The stock should reflect that and go up 6%, maybe add a little bit of premium. It goes up 8-10% to reflect that. That's how the stock market works. What happened in Palantir, though, is the revenue growth.
Why I allowed
this.
If
you look from Q4 all the way to the recent quarter, the revenue growth went up by 42.63% from the beginning of the year to the point where we are today. But the company's valuation, aka the stock price, went up by 172.32%. Why do we see this gap? If the stock was up by 40%, 50%, 60% year to date, we would have said, okay, it's reasonably priced.
Well, that won't even get you 100%.
Maybe they're going to do a higher growth rate. But all in all, for the year, the growth rate for Palantir sales will be 50%. So it's okay for the stock to go up by 60%. But going up by 172%? What is the reason behind that? You look at the valuation of the company, $452 billion. Meanwhile, the revenue that they're producing right now in the 12th trailing month is only $3.9 billion. There are companies that produce $50 billion worth of revenue, and they're not even valued at half of the valuation of Palantir. So what is the reason behind the excessive stock performance by Palantir? The excessive expansion of the valuation? It comes down to this. I said many so-called financial influencers and YouTubers are sponsored by Palantir and the deep state mafia. Watch out how desperate they're going to be today, urging you to buy the dip. In a nutshell, and we made a video about this last year, Palantir is a marketing scheme. You've seen the ads in the Journal. You've seen the ads in the Super Bowl.
Let the pump begin.
And they pay all of these influencers on YouTube, on Twitter. Anybody who's pumping Palantir and the retail investors is paid by Palantir. And their job is to recruit more and more retail investors to chase the price action. And in the short run, that works out. You have more buyers than sellers, the price goes up. And then as the price goes up, these influencers become more popular. And they're getting paid by Palantir, so they keep recruiting more. Look at what we've done. I'm up 70%, I'm up 100% of my shares.
MP.
Still more to come. And their job is just to
Price
get more
compression
and more
in this area here.
investors, retail investors' money to be poured in Palantir. When the valuation doesn't make sense anymore. Like I said, if the stock was up 50%, 60%, I would say, okay, it makes sense. It's fairly valued. But as it stands right now, it doesn't make sense at all. And that's what the shorts are betting on. This is a pyramid scheme. Maybe not the company. Palantir may be a legitimate company that's going to make a lot of government contracts and oppress us all and make a lot of money. But at the end of the day, the stock of the company is a pyramid scheme. Some would argue a Ponzi scheme. You have to recruit newcomers to push the price higher, the greater fool theory, so the early investors can get paid. And they sell their shares.
That's the entire stock market.
Billions of dollars.
Let's be clear there.
While new retail investors chase the price action and hope that I'm going to be like that YouTuber that I'm watching who made 100% in Palantir. the price is going to go to 1,000 now. It's stupidity and it's wrong and it's going to end in a disaster. That's what Michael Burry is betting against. And at the end of the day, folks, forget about Michael Burry. The greatest investor of all time, Warren Buffett. We learned this weekend that he did not buy back any stock of his own company, and he's hoarding a massive amount of cash, now sitting at $381 billion. A lot of folks want to get into the argument of the bull versus the bear. I would say we have bears in this market.
That's a good point, Chase.
I would consider myself as the biggest bear. I consider myself as the new big short. You will hear about me later. And then we have the pigs. The greedy pigs who want to chase the price action and scoop whatever they can get. And they say, yeah, maybe it's a bubble, but we're going to exit before it crashes. Yeah, sure, good luck. But the bulls, the legitimate bulls, they're gone. When I think about bulls, the biggest bull is Warren Buffett. And Warren Buffett is not chasing any of this. Warren Buffett is saying, I'm worried about what's going on. I'm going to hoard as much cash as I can. And then after the crash, I'm going to begin to scoop these assets for pennies on the dollar. Buffett is ready. So to recap this conversation, folks, the big short is back with a massive bet against Palantir and NVIDIA. The CEO of Palantir doesn't like it. He accuses the shorts of being skeptical on AI. Number one, we said, no, we're not skeptical on AI. We're skeptical about the hype around AI. Palantir CEO says, we're a good company. Don't bet against us. You're not a good company. You're an evil company. Number three, he says the valuations, you said it's overvalued before. Why is it overvalued right now? I just showed you the facts and the data. That there's a huge gap between valuations and the company's fundamentals, and we're betting against that excess hype, not the fundamentals of the company. And with that, folks, that wraps up the conversation right here. Hope you enjoyed it. I'm a little spicy today. Took a lot of shots on very
Kodak with the talk jock. Let's
Anyhow,
go.
The conversation continues here, folks. If you happen to be a member of the show, we got the market recap.
Three of y'all hitting that today.
In the comment section below. For the market coverage, we do the options analysis, we do the heat map analysis, we do the technical analysis. Every aspect of the market will we see. So if you happen to be a member, check it out. If you're not a member yet, I urge you to join us and watch the market coverage as part number 2 of this video. But folks, this is all I got for you for now. Thank you for joining me. Thank you for listening. Thank you for watching.
All right. Real trainer, 35, 12, 180 call. Yeah, show me that you bought that, Cheese. Show me. Show me. I did my DD actually. Let's go into 100. That's the energy. That's the big dick energy we need. That's the big dick energy. It's on the tape. Oh, let me look at this. What did you say? The December what? It's on the tape. All right, let's see. December 19, 180 calls. Oh, is this you? The 2,000 purchase? Or was it the measly 1,000 purchase? Oh, December 12th? You're right. Wait, why does that show up in my open volume? I mean, my total volume today. That was literally 2,000 shares traded there. And I'm showing 71. Huh? I'm on the wrong date. It's the one I clicked. December 12th. Yeah, this is the one I clicked. Click this. This is it. Shows 2,000 shares of volume here on November 11th at 12:45 p.m. Just an hour ago. This is a minute sharp. It shows up here, 71 shares. E-turd for the win. Yeah, that's exactly it. Quality programming. Oh, this is, dude, perfect.
I'm doing this show without a laptop for the first time ever. I just want to be able to show you guys my versatility.
Did you leave it at home?
Yeah, I'm going out to dinner tonight. I want to schlep a bag on my back. What? Oh no, I still got. You're worried. In case you were worried.
This is like the Mad Money special effects board.
You know what? It turns out, John, I think I do need that laptop stand because I'm going to put my phone up, prop it up.
Prop it up.
So, dude, you look like $1 million. You do. Nobody else is saying that to you? You look great.
I guess it's the cold wind in Canada. So,
is that what you got? You got a windburn, but it looks like a suntan.
Yeah, right.
You catch a few 10-baggers.
Well, you've been outside. You've been outdoors a lot, so it's understandable.
Of course.
It was so goddamn windy last night. My house is creaking.
It was actually colder here today than it was in Toronto.
Dude, I hate this. I hate a lot of people like the fall. I despise.
So I actually like daylight savings time. I like that it gets lighter earlier, but the nighttime darkness. Right, what do you mean? Yes, it is. In the morning, it gets light earlier.
No, the morning just starts earlier. It doesn't get lighter earlier.
We're saying the same thing. When you wake up, it's light.
No.
But getting dark at 4:30 is depressing as shit.
Yeah.
Like it actually chemically fucks you up.
Well, I like to go to Drake's early morning, so I actually prefer like,
like the sun rising
7
above.
a.m., 6:45 a.m., and I actually preferred it when it was like darker. All of a sudden, it started getting.
Do they have restraining orders in Toronto?
When I first told my wife I was doing this, because my 16-year-old son said, you know, this is a surefire way to get attention.
Mine's acting up.
This.
He was not surprised.
He was right. He was totally on the mark. But she was like, "You can't do that. You know, the police are they're gonna arrest you. You're gonna be on the front of their cruiser."
Do you live in this? Do you live in that neighborhood?
I'm like 5 minutes away.
So basically, yeah.
But I'm not in one of these mansions that Drake said.
Not yet.
But, no.
Right.
But my wife was all worried.
If Open Door goes to 82, you will be.
Well, my wife was like, you know, if you do those videos, you can't show his house number, because then people can find him. I was like, honey, he's on the Kendrick Lamar album. Like it's the Google Maps like photo of his mansion.
It's literally the album cover or the cover to the single is Drake's mansion with a lot of not Amber Alerts, but whatever those. It's not. Really? It's really bad.
Oh my
God. It's very bad.
Straight from Google Maps.
So wait, are you doing that every day? And what are you doing?
Today was day 80.
What do you do?
Here, live from New York City.
Stop. Let's not step on the show. Well, we're gonna get to all that
real quick.
All right. So you promise
how we looking,
you
guys?
promise multiple 10-baggers for us today?
Yeah.
Yeah.
How many 10-baggers?
We're going after 100-baggers here, Michael. Come on.
That's my bad. 100. I'm sorry.
100-baggers.
I was thinking small.
10-baggers.
I was thinking small. You know, when you tweeted the Open Door at was it 80 cents? I swear to God, I almost bought it. I said, this guy, he's got something.
It was 88 cents.
88 cents.
The moment I tweeted. I bought it earlier. I bought it like 70s.
What's the price
70s.
Today?
7. Well, it was $7. I think it dipped.
But it got to 10.
Got almost to 11.
Are you?
Nobody can be. So now nobody can be mad at you because.
Oh yeah.
It keeps going down.
Nobody has the right to be mad at you. I should rephrase that. Has the right to be mad at you because it 10-bagged.
Yeah.
You're saying it's a 100-bagger, but I'm just making the point. Like it did 10-bag. Like people that bought it had ample opportunity to take a profit if they wanted to.
I think
you're not their financial advisor.
I think at the height it was like 20 bag.
Wow.
Yeah.
Unbelievable.
Not bad.
But no, people still get mad. It drops, you get the hate tweets. You get the hate DMs.
Wow.
Like, tweet something. Get the stock price up.
Respectfully. A, welcome to my world. B, this is the lifestyle you have now chosen.
You made your bed.
That's right.
I think it's gonna work out for you. I actually have some ideas for you, but we'll do the show. All right, John, what episode are we doing here today?
Josh, we are on the Compound and Friends episode 2.
Today's show is sponsored by Victory Capital. Not all growth is created equal. While traditional growth investing focuses on revenue expansion, The Victory Shares Free Cash Flow Growth ETF, ticker GFLW, tracks an index targeting something more powerful, profitable growth. GFLW provides exposure to high-quality, large-cap U.S. companies that don't just grow, but generate free cash flow efficiently. The Victory Shares team believes strong free cash flow indicates a high-quality company because it demonstrates a business's cash-generating ability after all expenses. The ETF's index follows a process, screening companies for strong free cash flow, return on invested capital, filtering for the highest growth prospects, and finally, weighting towards companies with positive momentum. Explore how GFLW could fit within your portfolio at victoryshares.com. Investing involves risk, including possible loss of principal. Victory Shares ETFs distributed by Victory Capital Services, Inc. Carefully consider the fund's investment objectives, risks, charges, and expenses before investing. For a prospectus or summary prospectus containing this and other important information, visit www.vcm.com/prospectus. Read it carefully before investing.
God. Ladies and gentlemen, welcome to the biggest investing podcast in the world. We are super excited for today's show. We've been talking about it all week in giddy anticipation. We have a returning champion back in the house with us.
Fourth time?
I don't know. You've been on a bunch, but you're one of our favorite. You know, you're one of our favorite people. And quite frankly, what I've watched you do over the last couple of months has been really exciting. And I did openly ask a question that I know you weren't thrilled with on this show about your activities, which I'm going to give you a chance to tell me.
You weren't the only one.
All right. I'm going to give you a chance to tell me why I'm an idiot. But all things considered, it's really cool to watch this career renaissance that you're going through. I think it's awesome. And we're going to get into
for the old guys.
All right. Guys, Eric Jackson is the founder and portfolio manager of EMJ Capital, an AI-driven, of course, tech-focused investment firm he launched in 2017. Over the past 6 months, Eric became widely known for leading the Open Army. Shout out to the... Wait, you just turned me off.
I did nothing.
Yeah, you did. I'm plugged into you.
I'm doing nothing.
I'm plugged into you. You did something with your volume.
Duncan, John?
We need sound.
You just turn your volume down.
Oh, because I'm getting beeps. That's why.
Okay. Do not disturb on your phone.
All right.
Still didn't work.
It's not working. John,
come over here.
Keep going.
All right. Anyway, let me keep reading your intro. Known for leading the Open Army. We are not AI driven, in case you couldn't tell. A grassroots investor movement supporting Open Door, helping reframe its narrative and driving one of the most dramatic turnarounds in the public markets. Eric is also the creator of Rising Dynasty, a growing community of investors focused on power law outcomes, conviction, and long-term asymmetric opportunities. Can I ask you a question? If you're in the Open Army, are you also in Rising Dynasty, or do you have to buy each of those memberships separately?
Yeah, I think you get
two movements
automatically entered into Rising Dynasty if you started in the Open Army.
All right. For Jesus Christ, one movement was good enough. I'm just saying.
It turns out we were bigger than Open.
All right.
We were bigger than
It's about more than just Open. I got that.
Yeah.
All right. In December, Eric will be launching EMJX, a Gen 2 multi-asset AI-driven digital asset treasury company where he will serve as chairman. Prior to founding EMJ Capital, Eric managed capital at Ironfire and Spring Owl Event-Driven Partners, where he invested in companies including Yahoo and Viacom. He holds a PhD in management from Columbia University. And I'm sorry, that's all the time that we have, ladies and gentlemen.
Wait, you're doing the digital asset thing? Are we going to talk about that later?
Yeah, well, let's do it.
All right. So, let's not do that first. We gotta start with the general market, because I think this is the week that something materially in the narrative about AI investing has sort of made a left turn.
Mm-hmm.
And Michael suggested we do this in order, which I think is a pretty good idea. The OpenAI thing, I described this to Kramer. It's the biggest player on the board, and yet he's still not in the movie. Like, in other words, it's like Kaiser Soze.
Mm-hmm.
Like, he's on everyone's lips, Sam Altman, on everyone's minds. He's doing deals with everyone, but he doesn't have a public company. So, yeah, we get some financial information, but it's selectively distributed.
I'm very confident in my assertion.
You got it?
Confident in my assertion.
All right, let me do the intro again. and so stop him from whatever that was.
He was doing it.
Okay. All right. So the point is, given how the centricity of OpenAI to the whole AI investing theme, it's a pretty remarkable situation that it's the only one that's not public. That's like materially, Anthropic too, materially important to all these public companies' earnings outlooks,
right,
and CapEx outlooks,
Microsoft,
and future
Amazon.
revenue growth, and it's a wild situation. Before we get into the chronology of what took place over the last week, do you feel the same way that it's really a situation that we've never seen before, or maybe I'm wrong about that?
No, well, like as a public markets investor, I hate that all of these companies like Stripe and OpenAI are still sort of clinging on to this Zuckerberg. I think who was the original guy who inspired this idea of just staying private forever. And I never thought I would see the day when a company would hit $1 trillion in valuation before IPOing, and yet that seems like
that literally might happen.
Yeah.
Now that couldn't have happened in prior eras because there used to be a rule, maybe it still exists but not being enforced,
right,
that if you have more than 500 shareholders, you are de facto a public company. Therefore, you must file financials at the SEC and be a public company.
Right.
Does that law still exist? We're ignoring it, or
I think we are. And
if it's a law, they're not ignoring it.
They are, because these investors are in a fund.
Oh, the SPVs.
So they're
of
counting
SPVs
the
of
fund
SPVs.
as one shareholder.
Right.
But
That's
also
how they
access
get
to capital markets. You would have had to go public because back in the day, corporate companies were not doing $30 billion investments.
Right.
So prior to this week.
Wait, I asked him a question. So
yeah, you never cut in.
Well, no, I'm really curious what you think. The level to which this is extraordinary. I mean, am I overstating it? Am I understating it? What do you think is the situation?
Well, they are like probably the biggest private firm, no question. And you are right that they are linked up to all these other mega Mag 7s that everybody already cares about so much. And so it's it is, and they have this guy who, you know, everybody freaked out about with his Brad Gerstner comments last weekend. And I've never heard so many references to Jeff Skilling, Enron, and the comment that he made in like 2001 on an earnings call where he called one of the analysts an a-hole for not knowing, questioning his financial models or something. It was that same kind of vibe. And so there were, there's so many people that reacted to that saying, oh, this is the sign that this is the top, and we're ringing the bell now. This is obviously an AI bull.
When the founder starts yelling at Wall Street.
Yeah.
Okay.
How dare you question me for how I could spend 1.4 trillion on outlays for the next 8 years?
So we're gonna get to that. All right, go ahead. Let's start from the beginning of the saga over the last week.
So prior to this week, OpenAI was operating mostly in the background. I know people that were following the story obviously were familiar with Sam. He's public on Twitter, but they were merely for the general public. They were the ones that was powering all of the announcements, the Oracle pop, but this was the week that they really took center stage. So here's what happened in summation. We're going to dive into each of these. So it started with the restructuring for them to pave the road to go public. That's what kicked this off. Then Elon and Sam Altman got into a fight on Twitter. Sam's co-founder, the deposition came out this week, and not pretty, a lot of ugly allegations in there. Then Sam, as we mentioned, was on a podcast with Brad Gerstner and Satya and got super defensive about very reasonable questions, attacking made-up shorts. And then the CFO yesterday stuck her foot in the mouth and said the government might need to backstop them. Everybody's like, wait, what?
She didn't actually say that.
And then them saying today, no IPO. And then, of course, the denial, Sam and her saying, no, we don't want a government backstop. We just want X, Y, and Z.
Let's take these one by one. The restructuring, Microsoft is already consolidating these losses from their OpenAI investment. Like that's a thing that's already happening. But clarifying what Microsoft's stake is an important step toward the IPO, because like they end up with what percentage, 27% or something? What's the number? And a 20% claim on their revenue. Yeah. Okay. That I think is what shoves this whole thing into broad daylight. Like, okay, they're on the IPO runway. Even if there's no timetable attached, they are now saying we're moving forward, and this is the first step one of the first steps we have to take. I don't know, what was the Elon Sam fight?
By the way, just the $1 trillion mark, like IPO. Come on. Come on $20 billion of revenue. All right, so Sam, hold on, let's start here. So Brad Gerstner was defending what he was saying. People reading too much into Sam being feisty. I love that about him and our founders. We laughed about it after. If you listen to his words, here's what is said. And I think Buco Capital made the point, and I know you love that guy, said, Sam breaks people's brains, just like Elon. It's a thin line between grifter and visionary, and creating true believers to harvest their capital requires rhetoric that makes non-believers recoil. Elon hates Sam not just because he stole his company, but his whole playbook. And Josh and I were just talking about this. Like, it's a similar thing to what Karp is doing. Galvanizing the shareholder base.
There's no way in the world I would have held 1,000 shares of NVIDIA
it's
down
not too
to
dissimilar from what you're
past
trying to
180.
do. But it's an effective strategy.
It allows me to take a trade.
The biggest Sam Altman fan. I
reap the benefits
I love Alex Karp
later on.
And
apples and
people
oranges.
Take shots at Alex Karp because
Alex Karp of Palantir.
He was on,
and
CNBC
also would eat up
this
my
week,
entire
doing the same thing
account
against
size, so I
Michael
couldn't trade
Burry.
other things.
You know, and but he's always been like that.
Yeah.
He's always
Are you calling
it's
me
not
yellow?
an antagonistic approach to these to the shorts. So it's not affected. It's not him. I don't know. I don't think it's anything more than the fact that he doesn't like these shorts. He believes in his company.
I agree with you. I don't think that's as performative as some people think. I do think there's some element of it, like, let's create this us versus them thing for the retail shareholders so that we have this army of defenders. I think there's a tiny bit of that. But I genuinely think when you build a company over 20 years, you become completely intertwined with it to the point where somebody saying something negative about your company, it's like somebody insulting you or slapping you in the face.
But Karp seems authentic.
That's my point.
Yeah,
I think it's genuinely insulting to him when somebody is saying I'm going to short your stock, because it's almost like I'm going to bet against you personally.
Right.
So I totally totally get that.
Sam gives off a different
Sam
vibe.
doesn't have a stock to bet against, though.
No, and like, I don't know, if I put my junior psychologist hat on, like, there is like some defensiveness in him. There is some like weird vibes you do pick up on. There is a lot of smoke around this company. Like, we haven't even touched on the fact that, what was it, like 2 or 3 years ago when like basically everybody quit that company because of Sam, and then there was this like board fight, and a bunch of board members left. There was a woman on the board then who just did a podcast where basically she sort of out and out said that Sam lied to the board back then, and kind of
that controversy was about the fact that, and this is Elon's problem with it, or stated problem with it, is that OpenAI was originally meant to be a foundation that was going to save the world from AI, while developing a type of AI that would be like helpful. And then all of a sudden it shifted to, well, we have a for-profit arm too, because we need to, because we're going to have to fund this technology, and that's totally reasonable. And then it shifted to, actually, most of this is going to be for-profit. And not only that, we're now in bed with Microsoft. And the true believers who were like, democratize AI for the people, were like, wait, what the just happened? Microsoft owns a stake in. So that power struggle then leads to Sam saying, it's either me running this thing or it's not going to work out. And the board sides with him because you need him, because he's the reason why anybody is investing to begin with. Okay, so that's explicable. What's inexplicable is being in the position that he's in, going on Gerstner's podcast and saying something to the effect of, there are times where I wish we were public, so that people could get short and I could burn their asses.
Yeah, it's like, wait, what?
That's crazy. That's crazy. That's super defensive. And even if you're taking it personally and that's why you're that way, all right, that's a lot. And then he says to Gerstner, who is arguably among his top 5 most visible defenders and proponents of him.
And shareholder.
He says, if you don't want your stock, no problem. I guarantee I'll get somebody to buy it from you right now. So people hear that and they're like, whoa, what's going on with this dude personally? That he's all of a sudden. So I am of the belief that where there's smoke, there's fire.
That part was weird.
That was super weird. And that tells me that behind the scenes, there's a lot of that going on. And we just saw a little bit of a glimpse of it. What do you think?
I agree. I mean, I think it was a dickish comment. I think that, but like, are we out to give awards to these guys for being like the best
but
human
here's
beings.
where it matters. If you're an investor in any of the companies that have just seen a 20% rise in their share price because they, quote, are in a partnership with OpenAI, this matters to the public investors in many of the largest companies in the world,
right,
including NVIDIA, and Microsoft, and everyone else who's doing deals with OpenAI as fast as they can. So I think that's why this is such a fascinating situation. We don't have a share price to gauge, is OpenAI rising or falling in the eyes of the public?
But if it was public, how much does it fall after that comment? 15% immediately? More?
Or in 2025 logic, it actually rallies.
Yeah, these days, yes, probably, yes. And I mean, the question, I mean, that says more about today's public markets than anything. I mean, I think the bigger issue here is that like AI and what's going on with AI is bigger than OpenAI, and so there are forces at work right now where Sam is an interesting player in all of this, but he's just like one kind of weird guy.
But he's not just one. He's at the center.
But it's $13 billion in revenue. Palantir has a $500 billion market cap and is on a $5 billion annual run rate.
And
in
it's
revenue.
it's 1.4 trillion
it's
in
a big deal.
And it's 1.4 in commitments. Like OpenAI is powering everything, and he's acting bizarre, and him fighting with Elon. So he tweeted, Sam did, and this is in the middle of all of this. This is the day before Halloween, a tale in 3 acts. So he shows a picture of him getting a Tesla.
John, we have this.
Your order is complete. And then he responded, "Hi, I'd like to cancel my reservation. Could you please refund me the $50K?" Which is sort of a weird thing to do anyway. It seems like he's just f***ing with Elon just to do it. And then it says, address not found. So then Elon tweeted to him, "You stole a nonprofit. And you forgot to mention Act 4, where this issue was fixed and you received a refund within 24 hours. But that is in your nature." And I feel like
this isn't gentle ribbing. These guys,
it's personal.
Hate each other.
Because
right?
also, doesn't it feel like from the shareholder base that Sam is basically copy pasting what Elon did with Tesla?
Yes, I mean, but then you could say that Elon copied and pasted with Grok, like what Sam did with OpenAI. So I don't know. This is like boys will be boys. This is like.
Yeah, but the stakes are like $1 trillion. That's
I grant you. Obviously, like I'm not trying to make light of the fact that like Mag 7 has all these commitments to OpenAI and vice versa. But I just think that that these guys, in the grand scheme of things, like these markets will roll on. Like the AI, everyone was freaking out over the CFO's comments yesterday or whatever about a government backstop.
Sarah Fryer, but those weren't her. She did not use the term backstop.
This is what she said,
right?
So read what she said.
Okay, I got it. It's bear with me. Well, I have to clarify. Oh, here it is. Okay, this is a Bloomberg article quote. ChatGPT creator OpenAI, the world's largest private company, is asking the U.S. government to provide loan guarantees for its massive infrastructure expansion that will eventually cost more than $1 trillion. She was at a business conference for the Wall Street Journal, and she said, "This is where we're looking for an ecosystem of banks, private equity, maybe even government.
Federal loan
ticker
guarantees
IBM,
would,
India
quote,
Bravo,
really
Michael,
drop
and
the
ticker
cost of
NVIDIA.
financing.
Yeah, no shit.
No, the speculation is circulating after a James Oshers.
Why even make a loan? How about a grant?
Quantum
Anyway,
partner, the company
people
behind the most
flipped
powerful
out.
supercomputer. Shares of IBM seen increases activity.
On financial Twitter, and then she finished that routine by saying, "IPO is not in the cards right now." Yeah, that won't be up to you. That'll be up to your privately held shareholders when they've had enough. Won't be up to. Did finance Twitter flip out too much over this?
Well, I think the idea that, oh my gosh, is OpenAI are they going to bailed out? Are they going to get bailed out? With Sam's weird answer on the podcast, it symbolizes that these guys are like another Enron or something like that, and therefore like we're going to be all as taxpayers on the hook for them. I mean, it's overdone. It's a great company with great engineers, Like to bring it back to Open Door, Open Door has been around for like 10 years, right? And so Open Door had some amazing AI and machine learning people before people were talking about AI, even like in the 2017, 2018. They had
a nice bottoming
and
pattern if
they don't today because a lot of them quit. And and basically there are two places where all the rock stars quit and joined.
Anthropic and OpenAI.
OpenAI and Meta.
Meta,
basically.
right.
Those are the two companies that have been paying the most.
Right.
So the Rockstar engineers have gone there. So they have amazing people at this company. And so a flighty CEO at the top.
Well, the real concern is now you have some of the biggest publicly traded companies in the country where analysts are baking in orders and revenue coming from these OpenAI commitments. And you have somebody like Brad Gerstner innocently ask something like, how could a company with 13 billion
Tom, I
annual
couldn't agree
revenue
more.
have $1.4 trillion worth of commitments? And then that answer.
I wish they would have
and then
beat
all of a sudden
Colorado,
people are
though.
like, wait a minute. Maybe these growth numbers that we're baking in for our public investments are not actually going to materialize.
Yeah, it calls everything into question.
That's the problem.
I think, if I was going to try to make the case for OpenAI, though, or in Sam's defense, okay, I would say
I wasn't able
never
to
been a
watch that game, but I watched the highlights. I was like,
shown the growth.
He's so freaking lucky.
I totally agree with that.
Like it's
just
from
a
the moment
tale
of
of
November
bad
2022 when
bounces.
the ChatGPT 3 came out,
goes
there's all
Kodak.
these
Damn it.
various charts that show the adoption rate on ChatGPT has just been
I know,
off the
ticker
chart.
QBTS, Quebec Bravo,
Right.
Tango,
It just
Sandy,
blows
those
by.
names all
Forget the iPhone, forget all the thing, Instagram adoption.
Now
Remember
what
how that
they've
thing grew?
now
That
what
was
they've
like
done
a
with
for a
that
while.
momentum
QBTS
is very wise.
Right.
They've made themselves too big to fail
Right.
in AI, meaning there are so many
capture it.
partnerships now, including with NVIDIA, including with you name it, Apple. There are so many partnerships, so many overlapping deals or bilateral deals. There are whole groups of companies that are working together that nothing can happen to AI without it affecting the whole I don't want to say house of cards, the foundation of the house that we've built on this theme. And that's the part that's concerned. I mean, it's brilliant on their part.
Well, and so and you say, 1.4 trillion in commitments,
I don't even know what that word means, by the way.
That's what so I think it's supposed to be 8 years or something out or so. But the question is if you're the CEO of this company, are you taking your foot off the gas
No.
when Anthropic is breathing down your neck and
break the 89.
Google's coming
That's all I
at
want.
you
Just break
with
89.
Gemini?
What does that mean? Take their foot off the gas.
Slowing down
Should
the
you
deal
not
making.
make those commitments?
Yeah.
Should the question take
Nope.
basically the what finance Twitter is saying is, just take it slow, just go easy.
Get profitable.
Just get profitable
But if-
first.
if you
But
believe-
these companies never get profitable first, they always go in breakneck speed. I'm
If you believe what Satya. So by the way, Sam Altman drops off the podcast shortly after that. He's like, I gotta go, and the way Brad was like, okay, no problem, thanks for being here. It sounded like he knew in advance that he would drop off, but people turned that into a conspiracy. Like he couldn't take the heat. I don't believe that, but whatever. That was the interpretation. But the thing about keeping your foot on the gas, if you don't, somebody else will. And there's a lot of money out there waiting to invest in anything that looks like it's winning.
Right.
So you're right. I agree with you.
And I would say that there has never been a platform. If you want to call AI a platform, there hasn't been a platform shift at this big. Before it's mobile. You want to compare the shift from desktop to mobile to this to AI. You're talking about superhuman intelligence, right? What's the value of owning that and sort of being the first to kind of really dominate AGI or whatever? How valuable is that for the US to beat China?
Yeah.
How valuable is it for one of the
Well,
American
if you look
firms?
at the CapEx, you can only conclude that the smartest people in the room believe it's the most valuable trophy of all to capture. And some would even take it a step further and say, if they don't, they're done. It's
right.
You look at the way Alphabet and Meta are spending on this, it looks existential to them.
Yeah.
That's the only interpretation you could have is that they're betting the company on it because they have to.
Right. And also the interesting thing about that spending is nobody ever talks about the operating cash flow of these Mag 7s. And yes, the CapEx has been up and to the right, but the cash flow has also been highly correlated with that and leads the up and to the right, so there's always been a huge buffer of cash flow for these companies. So they're never spending out of their pockets. And the folks who are making these decisions at these companies, someone was telling me, like, you don't understand like how much like a thought and preparation goes into the business cases before they spend billions and billions of dollars in commitments in their budget. So they're not stupid, and they know that there's going to be payoffs from these capital commitments to build out these data centers.
Will they all have a payoff, or is someone going to lose? Is it a foregone conclusion that Meta's AI strategy is going to pay off?
Well, I think the biggest risk is going to be that the energy grid can't keep up with the demands. So the data centers will be there, but will the energy be there to kind of power that? And that's why there's been such a scramble just in the last year to build nuclear, get 3 Mile Island going again and all this kind of stuff.
Meta said that Reels is at a $50 billion run rate, and thanks to what they're able to do with the compute. But I think there's a bunch of different risks. That's one, that there's just a meltdown. We just can't power all of these things.
Or a political risk. Everyone's electricity rising, like socialism.
Yeah, that would do it.
In order to support the growth of these data centers in your neighborhood.
That would do it.
That's not popular.
Another risk is that we hear on one earnings call, the demand is not what we think it is, and these things gap down 1,000,000%. But we're not close there, because they all said on the last call that they're undersupplied. They all said the same thing. So that's probably in the future. But then the third risk, and which is coming to fruition this week, is, hey, wait a minute. OpenAI is at the center of all of this, and there is now doubt about the person leading the company. And also, there was this narrative in 2020.
What interview did Sam Altman have that was
that
bad?
Google's in trouble. Like, they better, and Google stock got killed. And now Gemini is growing faster than OpenAI.
Let's put that chart up, John. Corporate AI. This is enterprise large language model market share. So it's the percent.
This is why I don't think the spending on AI isn't going anywhere anytime soon. Companies are volleying here for who's going to own basically the public, or even commercially, who's going to own the de facto brand, the Windows of operating systems, the Samsungs or the Apples of the phone. Like, it's as soon as you destroy your competition, you win, and you're going to win for a very long time. That's what's going to happen with AI. All these companies are going to push because they know they have to beat out their competition at all costs, because once that happens, they have 10, 20 years, maybe even longer, who the hell knows, of dominance. And that's when they make their money. It's a space race. Yep. Think about with Microsoft. How long did they push their Microsoft phone, whatever, dump money, and they lost because they started too late. That's what's happening with AI. And they might all be winners. I don't know. Probably not. Someone's going to win. Maybe a couple are going to win. And the same can be said for the companies that use them. It's a space race. That's a good way to put it.
Percentage of the market that they're estimating these companies have. And
Microsoft
the only,
phone? They had,
the only two heading
Windows
higher
phone.
are Anthropic and Google.
Think of these
Meta,
tiles.
I guess that's Llama.
Very much the tiles that you have, or did have, I should say, on Windows 10. They don't exist anymore. But remember how you had tiles on the Windows 10? That was like basically the idea for the Windows Phone operating system.
Is falling, at least relative to the others, not falling in absolute terms.
So this is it. If
And so is
OpenAI,
OpenAI.
if they can't make good on the $1.4 trillion that they've committed to, and obviously all of this is showing up in analysts' earnings per share estimates, lower.
Right. Let me share this with you. Deutsche Bank's AI hedge,
To the
navigating
dot-com
the
bubble.
data
Well,
center
the dot-com bubble
debt
was
surge.
just a little different.
Deutsche Bank AG.
Dot-com bubble is very different. Everybody points to the dot-com bubble as AI bubble, but it's so different. People were throwing money into companies that didn't even really exist. Like, that's not what's happening here. And valuations were going completely stupid. I mean, completely stupid. Some happens in the AI space with this, but not across every.
Is taking cautious steps to mitigate risks from its burgeoning exposure to the data center sector. I guess they're raising debt for all these build outs. Okay. fueled by the explosive growth in artificial intelligence, cloud computing, blah, blah, blah.
KLO.
Executives at the German banking
Yeah, that
giant
could
have been
be one.
discussing strategies such as shorting a basket of AI-related stocks or employing derivatives to transfer risk.
When
This is a
AOL,
financial
prime example, and we have not seen this at all in the AI quote unquote bubble. AOL was like doing a split because their stock price was getting too high. Too high back then was like over $100. I remember it's like almost every other day their stock would do a split and then double, split and then double. That kind of mayhem we are not seeing.
Time story. Who
I got to
would
find
be
out.
nothing less than
I was
gleeful.
pretty young. I'm going to ask ChatGPT. I don't know if it'll find it or not, but how many times AOL split back in the .com bubble? If it can find the dates for me, that'd be interesting. I remember it like every other day or once or twice a week, but I have no idea.
To see this entire thing crash and burn, we should point that out. What do you think when you see headlines like that? If that's even 10% true, it's a little concerning.
Well, like my first question is like, what are all these AI stocks? Because when I turn on the TV and I see AI is in a bubble, like, okay, NVIDIA,
Broadcom,
we know Palantir,
Micron, Dell,
okay,
Hewlett Packard.
Out of all of those, I would like none of those is in a bubble with respect to its like multiple that it's trading at now relative to where it's traded at historically, except for Palantir.
Provided the earnings next year show up.
Yeah.
Then we got no problems. I agree.
But like when I last looked at NVIDIA, for example, it was trading like below the 50th percentile of its like sort of like
32 times earnings, and 3 years ago it was like 90.
Right.
Yeah.
So I think people have been skeptical that NVIDIA is going to be able to keep up these like multi-billion-dollar quarters, and so therefore they're ratcheting down their kind of future expectations, which is why their multiple has been relatively conservative compared to where it's traded at in the past. When
It never did it every other day.
So it's really only Palantir. I love Palantir. I love Alex
another
Carr.
stock I'm thinking of.
I missed it. I missed
Cause
it.
a problem with this guy.
I tip my cap to Dan Ives for
We're
being.
gonna have Navy SEAls coming through the window.
Look at this stock.
But last I looked, trades
That
at
new highs no ticker
86 times
QBTS on continued
You will
activity.
take it. You will like it.
James Alster long with you on that note.
believe in
Back
America.
Bravo Tango Sandy.
I think Michael Burry has, for some reason, he gets lauded as this like brilliant guy
As he
because he's
should
on the
have.
Big Short, and everybody reports his
Compensation-based
puts
or
on his
performance-based?
latest 13F, but nobody
Very,
ever goes back
very
like 6 months later and says,
lofty
"Oh yeah,
goals
remember all
to
these
re-
puts
to
he
hit
bought,
the-
like expired, like
give the
worthless."
man
and
the
all this,
money.
He
like
does
a
admit
freaking
he
hurt
does say
us.
things like I was wrong, like that go to cash call or whatever. Sell one word tweet sell. He owned it.
Right.
One of the Thread boys was pointing out that like for the last 4 years or whatever it is, his 13 Fs have been coming out perfectly within a 24-hour window of the same date, quarter after quarter after quarter after quarter. This one happened like 10 days early and coincided with the earnings call for Palantir. Almost like, by the way, before this thing reports, you should know that I own puts.
Right.
You think he's sending a message in the timing of his 13 Fs, or have we all just been like
thread?
eating too many of these?
I figure
mushroom
Oracle
chocolates and we
headline
don't
on
need to calm
Bloomberg.
down?
Banks are lining up
I
for
think
$18
we're
billion
all getting
loan.
a little too
Oracle
It's
tied
too
to
much.
hyper
Mexico.
focused
I
on
agree
all
with
of
that.
these,
Data
like,
center, Oracle shares just seeing
color
heavy
was,
activity on that
his pee
headline
when he
from
got
Bloomberg.
up in the
Oh
morning.
shit! I
I
just
agree with
got
that.
picked.
There are people comparing the behavior of Sam Altman in recent days and weeks to Sam Bankman-Fried in 2020 or 2021. That seems a little extreme too, I would say. But like, this is the mood out there. There's a lot of people that want to see this thing either because they missed out.
I think it's super bullish.
Look
to
at
be
the
honest.
sellers
I hear
lined
all
up for that headline.
Angst and
Well,
concern.
they acted
and
that way with
gnashing of the
Elon.
teeth.
Happy to
too.
be out.
So
Like
Someone was
remember
ready
the
to
world
sell
was going
on
to
that.
end because
I shouldn't
Elon
do that.
called
It's
the guy
Friday, man.
a pedo guy, and then the world was going to end because
A lot of headlines
he
on
sort of
Friday
made these comments about
are
Bob
liquidity
Iger,
events.
like go after yourself and all this kind of stuff. So. And yet we all went back and we bought Tesla again. It's like, so I just think like,
BTC
market
is
rolls
trying to
on.
curl.
that's a really good point, and it ties into what you're doing now. The investor class is not precious about the norms and traditions that we grew up with in the 80s, 90s, 2000s, 2010s. Like the investor class now, they love seeing the leadership of these companies acting as unconventionally as possible, telling people
over
to go fuck
1,000.
themselves if they don't agree. Like it's like almost like a version of pro wrestling. And we're not precious about, well, in my day, a CEO would never act like that. Well, it's not your day.
Right.
It's a new day. The audience for these antics is 27 years old. They're on Robinhood. They're plowing money into their account every week. They're buying options. They love this shit.
Right.
It's a spectator sport. So you can fight that tide, or you can stay completely out of it, or you can lean into it.
Right.
Eric Jackson has chosen to lean into it. Tell us about your midlife crisis. How did it start? And what are you having as much fun as it looks like you're having? The stocks are working, so that's good. But like, what's going on with Eric Jackson?
I think the midlife crisis actually started here in this room.
We did it
3 years ago, or whatever. When you guys asked me to, in the middle, it was June 2022, and you guys asked me to say, like, you were talking about, will tech ever come back because things are so bad. We thought
That's so us.
You know, like,
what was the title of the show? Is this as bad as it gets?
Yeah, something like that.
So
I can reverse a stock, man.
Duncan, look it up.
I can reverse a stock.
I
can reverse a stock.
Give us name names.
Yeah.
Name names, Eric.
Like
give us the name of a stock that's going to come back from the dead.
Yeah.
One of these like Left for Dead companies.
Okay.
And so I said, well, I got two, and I mentioned Carvana and Open Door, and I gave the reasons why. Very similar businesses, and one's going after cars and one's going after homes and all this kind of stuff. And I don't know if you can pull up that chart that shows like for the next 6 months after that podcast.
John, let's roll it.
I did not see that until like this morning.
Your Carvana call on this show was one of the best, like Babe Ruth point at the stands. That was one of the best calls I've ever seen.
No, it wasn't.
Not for the first 6 months.
No, it wasn't.
What do you mean, no, it wasn't? How much did the stock go up from that day?
Me.
I know you know.
Can I present the case?
Yeah.
All right. Charts on.
By the way, why is it 700 degrees in here? You guys doing that on purpose? I'm shedding a layer.
So
get the cold to lower the thermostat.
So yes, it was a legendary call. Carvana is up 1,200% since. John, let's roll through some charts, please. Do you not have this?
What chart do you need?
The Carvana ones, 12. So you pitched this on June 17th, 2022.
Looks great if like on the big picture.
So these stocks were in massive.
The red line is Eric.
Yeah,
the red line's the podcast.
Massive drawdown. So nobody wanted anything to do with these names. Next chart, please. And then ever since, we know what happened. Carvana's up 1,200%. Open Door had a rocky road, but let's zoom in a little bit. So Josh said Eric called the shot as one of the greatest calls of all time, and actually not even close.
I don't know if it works that way. I've ever seen personally.
Really? Because after Eric said that, these stocks fell 90 and 80%.
You have to have patience as an investor, Michael. I tell you this all the time.
I've tried that line with my own hedge fund investors, Josh.
So,
and you know nobody cares when you're 90% drawdown.
So Eric called Carvana, which was a 100-bagger. But right after he came on, it fell another 90%, 90%, excuse me.
Jeez.
Open Door fell another 80. So you absolutely nailed it, sort of.
No.
So the episode was called "It Can't Really Get Worse."
Oh, it got 90% worse.
It got worse. Wait a minute. So this is important though. You didn't buy all your stock in Carvana and then come on the show. You probably bought that dip. This is what it means to be an investor.
Yeah.
Dip.
If you like a stock, what was it, $2 at the time?
No, when we were on, I think it was $20 or something. Carvana.
And it went down to 2?
And it went to 2?
It went down to $3.50 was the low.
Yeah.
What ended up being your average cost if you were able to reveal?
It had been at $400.
Right.
It came all the way down to $3.50 in December 22, and then it's come all the way back to $400.
It's unbelievable.
Oh, shit.
So
was it the best performing stock of last year?
For several years,
several years,
but what's like so incredible. So what happened is I knew this stock. I knew Carvana. We'll talk about Carvana first, and then we'll go to Open Door. I knew I traded Carvana well because like in the years prior to COVID, I'd been like a small mid cap, like growth tech investor. And so,
what is this thing
Carvana
doing?
IPO'd in, I think 2016 or something like that. So it was a go-go stock. Like, and Wall Street didn't care. It was like balls to the wall, keep building these bubblegum machines by the interstates. Don't run it for profitability, just run it for growth. And they were obliging, and the stock did. That's how they went from like $15 to
in the
$400.
0% interest rate era. That was the logic.
Right.
Yeah.
But what was interesting to me in 2022, when the stock was collapsing, is that the CEO, Ernie Garcia Jr., he bought $70 million of his own stock that year, 70. And so like one in a tranche in like
That's
March of that
conviction
year
there.
when it was like I think it was like $50 at the time.
Oh my
and
God.
then another tranche around June when we had that podcast around like $20 million.
He followed you into his own stock?
But then later on in the year, around Thanksgiving that year, there were two guys. One was the chief product officer, another junior management team guy. One bought $3.5 million worth of stock at $7.50, and the other guy bought about, I don't know, $700K worth of stock. But you never you see CEOs token buying their own stock at the lows, like Michael Dell, like he bought Dell,
and they're billionaires, right?
Yeah.
It almost doesn't matter.
You never see like a chief product officer
Rank and
buying
file.
$3.5 million worth of stock.
Yeah, where do you get that money from?
Because like probably 98% of his wealth is tied up in the stock already through RSUs and all this kind of stuff. And so he's, so it turns out that guy was a Canadian guy. He followed me on Twitter. Dan Gill's his name. And so like I reached out to him in January of 23, and I was like, hey, can we chat and stuff? So I called him up and I said, hey, Dan, I got to be honest with you. Like I look at a lot of like insider filings. You never see like people like you, with respect, spending $3.5 million on their own stock, especially like a battleground stock like Carvana. Like, and he was like, "Oh shucks, like I'm just, we've got a tough road ahead of us. It's not guaranteed, but we really believe in each other. We all went to Stanford together, so we know each other on the management team and all this kind of stuff." And I said, like, I said, to be honest, I don't know if I had that conversation with my wife. Like, I'm the chief product officer for Carvana, and like, hey, honey, let's take $3.5 million out of the IRA. We're going to roll it into more Carvana, okay? Because I really believe in Ernie and the team, and we've got this. To be honest, I don't know if my wife would have been okay signing off on that.
That's a high. No way. That's a high. She's like, wait, you work there? No, that's a high level of conviction. Why was that stock at $2? What did people think it was a fraud?
I'd go on these TV shows where I'd debate like the Wall Street analysts covering it, and I was like, hey, Johnny from Wedbush or whatever, like, how'd you come up? I'd say this off air. I wouldn't say this on air. It's like, how'd you come up with your $20 target? Are you basically saying like, you think as a running company, this should be worth 40, but there's a risk that it might go bankrupt and therefore go to zero. So you just pick 20. Yeah, it's like, yeah, basically that's how we did it.
Oh my God.
So,
but what did the bears think? What did the person that sold it at $3 must have thought it's going to zero?
Right. It's going to file for bankruptcy. They
that was
they can't
the issue.
keep up with their debt.
The debt.
They had too much debt from building all the
and rates were rising. Therefore,
rates were rising. Who's going to buy a car from this service? This service is dead. And yet you talk to people that used Carvana and they loved it, even at $3.50, where they didn't care about the stock price. They actually loved the service. So so I didn't get in right away. I was still like working away. I had a billionaire who was an investor in my fund who pulled out at the end of 22 after like I had 2 years of bad performance.
Sam Altman.
And I was like, and he was like 99% of my AUM. And so I was like, oh my God, and I had all these like lawyers and Cayman's directors and people I was paying money, like a lot of money to, saying, Eric, you just got to shut the firm. It's like not worth it. Like,
you got to stop doing this.
He was all your funds. And now you've had like these bad 21 and 22 years. The way that you do it in the hedge fund world, just shut down. And then like
Start
6
over.
months later, start again, and you don't have to show it anymore. And so, and nobody, because
you don't have to worry about a high watermark because it's a brand new fund.
Right.
You're never going to hit a high watermark back when you're down enough.
Yeah, but I didn't even care about that. And I just said, you know what? The whole thing's paid for. And I don't know. It didn't feel right wanting to shut this. Although I didn't feel great thinking like, what the heck am I going to do with the rest of my life? And how did I get here? Am I going to be able to keep paying for my kids' schools and all this kind of stuff?
This stock resurrected you. Is that too much or is that about right?
Yeah, I got to work on building like the little AI team within the company. And the first iteration of the first model that they built
What, you want me to look at GME? As soon as I look at it, it's going to freaking reverse.
Right now,
there's nothing to see here.
They said in May 23,
it's up 1% today, and it's getting its ass kicked on the daily. When does it actually start going up?
Of like what the model says, should be my top 10 positions.
Right now, down.
And number 2 on the list.
I wanted to do this.
Was Carvana at $11 a share at that time. And I was like, "Are you sure about this? Like, can you check your numbers again? Can you take this back and like just
from the lows?
Just humor me,
man.
Like,
I don't want to
math
you're using there.
Sort of jump, both feet in and like, find out later, like 2 weeks, you were like, oops, we didn't update the simulator and this and that and all this.
Once in a while.
And so it took him a week. He comes back. And he's like, no, it's good. Yeah, I think you should really buy it. And by that time, it was like $15. And that's one of the most interesting things about these 100 baggers is that they get priced basically as if they're going out of business. But when they start moving up,
whatever the freaking
it's violent.
Especially with a lot of shorts.
So this went from like $3.50 in December of 22 to by June it was like $25. It was over $25. So and it was just a combination of like, the earnings weren't so bad. Like they weren't great, but they weren't terrible.
Why don't you sell at that point? Where's the conviction coming from?
Well, so I got in. So I trusted the model and got in at 15. And so then I stayed with it, and the models kept saying, no, stick with it. But between 15 and $150 with Carvana, there were 3 separate times where it had major drawdowns. There was one 66% drawdown that it had in the middle.
Holy
and so
shit.
this was like a major position.
You rode through that with a full position?
I kept it. It went from, and then it drew down.
I'm almost tempted
days.
to, Cheese. It'd be great prop.
To like $42. Like no news. There was no news. I don't know. There's just like macro
Cheese managed to find the ultimate energy drink.
Something and pissed the markets off or something. And so, but then I just decided like I'm going to stick with it. But at 150, I started having this voice in the back of my head, like the billionaire who used to have money with me. He had like some Swedish guy who was like his chief investment officer who worked at his family office, right? And so he would always be on my case, like, Eric, why don't you take a profit when it stock 2Xs or 3Xs? What? That's not good enough for you? You need a 5X to sell, like a 10X, like
100X, motherfucker.
So, and that's the mentality, like that we're all sort of taught growing up. It's like it's all about batting average. It's like just to eke out a gain over the market,
singles and doubles.
Like you don't just sort of like, hey, I'm gonna like roll the dice and just sort of, let it
days.
all hang out and stuff like some of these people like that you hear about in trading crypto or something. And so but at 150, it was too much. I was like, I'm sitting on a 10 bagger. I know this guy would be like all over my ass saying like, I got to sell this thing. So but even then at 150, I shit you not, I believed that this thing was going to go to $400. But I said to myself, this thing is volatile. And so I'm so smart. I was the guy who like got into Carvana early. So I'll just like trade it. Like I'll just sell it at 180, buy it back at 130.
The fantasy that everyone thinks they're going to do.
And honestly, like if you added up all the trades from like 150 to 400, I'm sure I lost money on all those trades.
Yeah, that doesn't work.
And so,
but it ultimately did go to 400, which is what you
pulled back. It's now 300, but still a great company. I don't own a position in it now. So, but then earlier this year, like the midlife crisis is like, I'm paying for all these AI guys. And they were like building all kinds of models, option models, crypto models, earnings models and all this. And I was like, guys, like, I'm not like a billionaire myself here. Like I can't keep funding this thing out of my pocket.
You're not looking for experiments. So, you're like applied AI guys.
Let's just pick, 2 models that seem like they're going to work. Okay. And like it looks like the Carvana model had something there. So let's just try to find 100 baggers. Let's do that in the hedge fund. And then the other thing that worked was the crypto models. So that's what we're going to do with this sort of Gen 2 crypto DAT thing, which we can talk about later. EMJX.
We'll skip the crypto for this week because I want to get to some of your new ideas.
So Opendoor was
let's start with Opendoor. So this is an idea that is currently in motion. Like it's not early, or you think it's early, but it's already gone up a lot. You're already right. So you sent it. What was the tweet that he sent at 88 cents?
I don't know. You tell us. What was it?
Well,
Get it, motherfuckers.
I just wrote out like it was some like 8 or 9 thread.
You said $82.
Yeah, that was the Babe Ruth call my shot moment. I was like, this thing is going to go to $82 a share in 3 years.
Let's just start with the reaction. you have people that know you at that point, but you have a lot more people that know you now. Right? But then you have people like me who know you from your past life as a very buttoned up activist investor. No, but you're a guy, like you're a legit guy. So I've never seen you do anything like that. Be like, this 80-cent stock's going to $82. I think people thought maybe that you were hacked. Like people that know you for a long time know you're like just an all-around good guy, calm. That's the midlife crisis-y part to me. I'm like, oh, this guy's lost his mind.
Oh, yeah. No, I got DMs from like...
All right. So I'm not the only one that had
Adam Feuerstein, who used to write at the street.com.
The scam buster of biotech stocks.
He's like, honestly, Eric, are
you okay?
Are you okay?
Yeah.
Honestly. Like, I don't want to pry. I don't want to pry, but like, seriously, I want to check in on you.
Did Herb Greenberg come at you?
No.
Okay.
No, I didn't hear from Herb, but I heard from lots of people, obviously. Lots of hate. Lots of people thought it was crazy and thought it was ridiculous. And I had no shame.
No, I thought the stock was going to work, but I honestly do think it is crazy because iBuying, you know a lot more about it than I do at this point, but I feel like it was an experiment that failed. Now, granted, it was in the absolute worst possible environment. iBuying in a housing bubble, probably not a great business. We found out. But I think
Zillow threw in the towel.
But I think we also learned
on iBuying.
But didn't we also learn that you kind of need people involved? Because I remember vividly one story that came out was some dude who's like, this house next to me, there's a gigantic barking dog in the backyard neighbor, and this house was on the market for 3 years because everybody knows that the neighbor's dog is impossible, will never stop barking. And Opendoor came in and bought it and sold it a year later for $100,000, whatever the case was. And it was like, yeah, you kind of need people to do this. So why do you think that this is a business model that makes sense in the real world?
Well, like, so why I did all of those things is like a combination of just like my own mistakes from the past. And so like learning from the mistake of not owning enough Carvana and not getting into Carvana early enough, not calling my shot with Carvana. Well, I mean, I guess I did, but I wasn't very precise on this podcast. I didn't say Carvana was going to go back to $400. And I mean, the two models of Carvana and Opendoor were very similar. So Carvana doesn't make most of its money from buying and selling cars. It's like
financing.
I buying for cars. They don't make money from that. They make money from finance and interest. 80%
every car dealership
plus of their EBITDA margin that they have today.
And there are a lot of great stocks that are just like that type of thing.
So I always believed, and it was part of the original tweet thesis for Opendoor, like they got to do mortgage and title. You know, for sure. Like that's where they're going to make their money. There's a reason why there's two guys who own NBA teams who run mortgage companies.
That's United Wholesale Mortgage, which is Matt Ishbia.
Yeah.
And then Dan Gilbert, Rocket, which I'm long.
Right.
You probably think that Opendoor is going to compete with Rocket. Is that part of your thesis?
I think Rocket's a great company.
We will rock you.
I think I have another company better that's more of a direct competitor to Rocket.
We'll crush that shit too.
But Rocket, the reason to be bullish on mortgage companies and the housing market and American housing is
the worst environment ever right now. How could it get worse?
We're at the beginning of the rate cut cycle. You know, it's a huge market. Rocket, as big as you think of it as this gorilla, it's only got a 6% market share. Like in the whole country.
Compete with every bank in the country for starters.
So there's an opportunity for everybody at the table to kind of get in there, and these guys, you know, Dan.
So, but tell me more about what you just said. Opendoor scores the same on your model as Carvana did. I'm not saying give us the whole AI formula, but like, what are the important things if you're out there looking for 100 baggers? What are the things that you're looking for?
Well, there's a bunch of technical things you can look for. So there are signs of capitulation in the stock and just the seller exhaustion and things like that.
Check.
And there's signs like getting above a certain moving average that makes sense for that particular stock, you know, which you should.
Because it tells you the narrative has changed amongst investors.
Right.
Yeah.
From a fundamental perspective, there's a major re-rating that happens when companies go from money losers to money makers. And so people thought that Carvana was going to go bankrupt, right? Because they couldn't make money and they couldn't keep up with their debt. And then suddenly they were able to shift and show that, we can make like decent EBITDA margins here.
That forces bears to reevaluate whether or not they want to stay on the short side.
Right.
And then that alone could trigger upside momentum, which attracts new investors.
And now short covering is another factor that you would
certainly
look
a pivot
at.
spot,
like,
though.
everybody all loves to go through all the most shorted stocks, and just because a stock is heavily shorted doesn't necessarily
many with good reasons.
Yeah, so Open Door reports in 5 minutes, and then by God, I really hope this doesn't get awkward. I swear to God, if this gaps down 30%, I'm just going to leave.
Gap down to 20%.
But how are they doing fundamentally? Like, I know it's very, very early. The CEO just left. We're going to hear from the new one. Is this a viable company?
For sure, it's viable. Yeah, like
no,
the guy who was the COO at Shopify, who like a $200 billion, I think we would
Canadian
all agree,
tech giant.
legit company.
Yeah,
right. So basically he had to do nothing for the next year or two, and probably Toby Luckey, who's the founder CEO, is going to bump up to chairman, and somebody is going to get elevated to CEO of that company and make a lot more money. He willingly left, even though he had this stellar reputation, to become the CEO of a $3 billion
How much
company.
stock did they have to give him?
They gave him an Elon type.
But that's good though. If you're a shareholder, you want them to do that.
82 million shares fully unlocked to him, which wasn't a coincidence, because 82 was my price target for it.
Okay, you're in communication with the board of directors now. They're taking you seriously. They've been for a while.
Yeah.
Okay. How long did it take for you to break through and be like, guys, I'm building the open army. You need to have me in your corner.
Well, Adam Bain, who used to run sales at Twitter, do you remember?
We know Adam.
He's on the board. And so I think the same day that I sent that tweet out on July 14th with my like $82 price target, Adam sent me a DM saying, come on, really?
Yeah.
Like he couldn't believe it. Like
I love Adam, by the way.
And
super nice guy.
So and then it was like a couple of weeks later, and he sees the stock moving up so much. It was 10 days after that first tweet where the stock got halted because it traded three times its float.
Well
on
done,
one
Nene.
day. Like and they just halted it for like 13 minutes. It went from it had gone from like 51 cents at the end of June to I think it was got halted, almost touching $5 in late July.
But this type of shareholder grassroots mania starting on social media, it's effective. And I feel like companies that have nothing left to lose because their share price is trading under $5, they're now actively they're cultivating this. So if a shareholder comes along and wants to get really vocal and whip up a frenzy about a stock, again, back to we're not precious anymore. Historically, the board of directors would be like, shh, don't encourage it.
Right.
Now we just saw Hertz save its own life. We saw AMC save its own life by cultivating this type of investor frenzy. So it's now, it's a two-way street. It's not just a thing that's happening to companies. It's a thing that companies are actively participating in.
I could tell the old CEO, she wasn't used to it. She was from that old school.
Right.
She was I'm just going to ignore this guy. And then she couldn't do that for so long. And the board initially was like, no way, we're engaging with this.
Markets
and then they've obviously totally come around. And now everybody since, at these other companies that I've taken positions in, like Better or some of these others, they've been all very.
Eric's buying. Yeah.
They're like, hey, like we love you. And we want to support the retail, and we're going to do video calls. And Open Door's doing a video call today, just like Palantir.
Eric Jackson organized a breakdancing competition to save the rec center. Everyone's very excited so now you're in the mix. No, I think it's cool.
Well, now the question is, and you guys talked about this on
GSAT Daily W.
Is it a meme stock?
No, that's not the question. The question is twofold. Do you get nervous that somebody will look at this and say, this doesn't look kosher to me? This guy's long the stock and being extremely vocal about it on social media. I'm not saying what you're doing. By the way, I draw no distinction between that and somebody getting on stage at Iris Own conference just because they're wearing a suit,
right?
And saying this $20 stock should be $100. Why is that okay, but doing it on Twitter is not? So I like it, and if it makes people money, great. But the dark side of this is if something goes wrong, you kind of become forever associated with, for better or for worse.
Yeah. No, right? I had a meeting this morning with some guy in Hudson Yards who he's anonymous on Twitter. So we met him in person. He's sort of famous because he tweets out these photos of his open portfolio. He's in one of his portfolios, he's full port open, and it's like he showed it to me this morning. I think it's like
how much money did you make him?
Well, it's a $17 million portfolio. He was in it before I tweeted about it.
Okay.
But he's very happy. But he was saying to me, he said, man, I just don't know if I could have done what you you did, where you just like stick your name out there. You know, what if you were wrong? Like, what if
So
you
what?
just
What
looked
if? Do you think about that?
I mean,
you just go back to Canada and pretend it never happened.
Like I've gone through so much crap in the last few years. Like you look at that chart. Like I've had like big drawdowns in my hedge fund. I had this billionaire like turn his back on me and walk away. You know, I'd gone through like this sort of like internal crisis and stuff. So like when people say like, oh, how do you have the gall to self-respect to stand in front of Drake's house making a video talking about Open Door? I'm like, you know, I just don't care. Like, you know, like I believe in Open Door. I believe in kind of like the types of philosophies that I'm advocating. You know, I've been amazed with like all the, it's predominantly been like middle-class people who are in the Open Army. And they're from like, I would say it's like 70% are outside the US, all over the world.
The Open Army are people who have bought the stock and are willing to celebrate the company on social media with each other. That's it. It's nothing more.
Yeah.
It's nothing more nefarious.
It's a new
than
version of GameStop. You know,
Yeah,
it's a retail group, but they, you know, they are much smarter than what you typically kind of get vibes from Wall Street towards retail.
It seems slightly more cerebral than GameStop. It's taking place more on X than it is on Reddit. Is my understanding?
Yeah. Oh yeah.
Okay.
So there's a lot of weirdos on Reddit now, and
I love Reddit.
No weirdos on Twitter. Imagine this thing peaks at $81.
You know, Reddit's got weirdos. Twitter has people who will like physically harm you in real life if you disagree with them on something political.
Oh, it's a heavy activity now noted for quantum
sell
stocks.
the merch? Like, how organized is the Open Army?
Whoa.
No,
do you have a newsletter that they're subscribing to, or how do you communicate?
What was said about quantum?
To them other than through tweets?
I haven't
telepathically.
I am. You know, I actually just had a Zoom with Phil Perlman, who's going to help me like start a newsletter.
Okay.
Because I haven't had a newsletter. I haven't been monetizing this. I have a hedge fund.
Can I do my Phil impression?
Yeah.
Genius, bro. Like you do the letter. Yeah. Of course you do the letter.
He's like, Eric, I fucking love it. You're authentic. You've tapped into something with this rising dynasty, and you're just gonna ride it, okay? Because it's you. It's you.
Shout out to Dr. Phil.
So what about these people that you say they're mostly middle class? Are you like, listen, I'm as enthusiastic as they possibly could be, and also be responsible?
Yeah, for sure. Like, so I started doing this Drake series, right? Like these daily videos in front of Drake's
so
house.
what, for the people that are totally mystified by we keep saying Drake, what are you doing?
So my 16-year-old in the summer, he's like, Dad, you're always like talking about how you think Opens is great stock. His name's Julian. He's 16. He's grade 12. His dream is to get like a D1 scholarship.
We have a son the same age.
Yeah.
Okay.
And he said, but like most people don't watch CNBC, they don't watch Bloomberg and stuff. Like, so
I took
like,
a CNC Charlie November Charlie notes headline.
No
Democrats
like, well, why don't you
proposing
do like
extending
a
ACA
video in front of Drake's
subsidies for 1 year. CNC seen spike in activity.
For one, Senate Democrats propose extending ACA subsidies for 1 year. Is that on arrival? Yeah, but it's gonna make me some damn money right now. Beta Chuck.
And I
Go viral, Dad.
I thought he meant like a one-time, like, you know, go take a selfie or do a little bit.
UNH?
Hey, I'm Eric Jackson in front of Drake's house. Yeah, I was like, yeah, great idea, Julian. You want to come over, be my cameraman and stuff? And he's like, no, you got to do it like every
This is
day
the big pivot,
until he
right? This
buys
is
open
the
stock. And I was like, what? And he's like, yeah, no,
Yeah, it has to become a
has to
thing.
be viral. That's the only way it can be viral.
This is a big area.
I was like,
You
what,
would
even
expect some
weekends? Like,
support
yeah,
here.
even weekends too. Like, how long? Well, it's open-ended. That's why people will tune in, because they'll be like, you know, intrigued. It'll be like the Truman Show.
And
They
they're
won't
going to
know
want to
what's
see
gonna
it, and
happen.
they're going to want to see it happen.
Right. Right. So I said, okay, I'm up for it. So we go over there. We start filming these videos, usually only like 3-4 minutes.
The market's got to change direction.
He said,
all this is going to change whenever the government opens
hold it up, and day 1, day 2. So yeah. So
with the airline stocks, also seen a bump in activity on headline. Senate Democrats have laid out a proposal to end the shutdown.
Pretty nice house.
We're going to keep coming back until Drake buys 1 share.
Look like such a fucking nerd in this.
Hey, Drake. It's Sunday.
Raptors
it goes on.
Some, not for you. You're about to play a show in Copenhagen. No rest for us over here. I've been up since 3, doing some analysis on Open Door. All right, day 19, Drake, back here. First of all, I want to say...
I've never seen this
Open Door merch.
Day 35, back here at Drake's. Had a big
I got a microphone here. People complained. I can't hear you.
Day 80.
Day 80?
Oh, my God.
Day 8. I didn't know he went that long.
We love you.
I love that he has a payphone in front of his house. Isn't that cool?
He's got the British, like the red payphone?
No, it's a Canadian
Bell
payphone.
Right.
I don't know. Anyway, so, I mean, this thing, I don't know, it's got like 10 million impressions across all the different videos. And so I feel a certain pressure to get to your point, Michael, like, you get all kinds of weirdos sending you messages saying like, I put all my money into Open Door and stuff like that. I don't know if that's, what I would advise. You should talk to your financial advisor and all that. But some people are really like into it and excited about it. And you do feel a sense of responsibility, obviously.
Yeah, I would hope so.
And
that would be weird if you didn't.
And so, and the other thing that you feel is like, how do you keep it fresh? How do you, like, if you're talking there every day, like what, like, oh, he didn't buy any shares today, so check back tomorrow.
Now,
and all
you
this
have
kind of
his bodyguard bought stock?
Yeah. So on day 10, we went over at like 8:30 at night. It was dark. And like in the middle of the payphone, by the way, turns purple at nights, which is really cool. If Open Door goes to 82, I'm definitely getting a payphone that turns purple in front of my house for sure. So this guy comes out of the bushes, and at first I thought he was gonna, hey, stop recording, get out of here, guys. He let me finish, and then like he comes over and like he's like, guys, what's going on here? We've been watching you for the last 10 days
heavy
on the security
activity
cameras.
for airline stocks. Headline: Democrats are laying a proposal to end shutdown.
It's the sign that
what you're
it's
talking.
one of two things: sign that the groups want to actually do something and come out with a deal, or Democrats could say we tried, and then they use it as fodder for political points. So we'll find out which is true. Right now, the market's liking it as a sign that the shutdown is going to end sooner rather than later.
Talking about stocks or something?
Yeah.
And I was like, well, no, it's actually one stock in particular. And I whipped out Yahoo Finance, and I was like, it's called Open Door. And I was a hedge fund manager who was early into Carvana, and it 100x'd, and we think like Open Door can 100x. And his name's Bucky. He's like, 100x? Like, so what if I put $10,000 in this stock? Like, it could 100x. I was like, yeah, Bucky, if you did that and I was right and it goes to 100x, you'd be worth $1 million. Your investment would be $1 million. He's like, what? I'm buying this thing on Monday morning. What does this thing trade and all this kind of stuff? So anyway, he's a great guy. He owns
stock goes to
owns
zero.
Open.
You're never going in front of that house again.
He owns Better. He owns Open.
Okay.
And so he said to me, like, he's like, the guy you got to talk to here is Future. I was like, Future?
Drake's
like, what's
manager.
that? He's like, yeah, Future's Drake's business manager.
Yeah.
He does all his OVO stuff, and anything business is him. So I'm going to hook you up.
Damn.
But Drake's in Europe right now. He's on tour for the next 2 months or something. So I still haven't met Future. I was texting with Bucky a couple of weeks ago, and he's like, oh man, they just went to the Bahamas. I think they all travel like as an entourage or something.
Yeah.
And so he's like, but don't worry, trust me, I'm gonna get them.
I got the cheat code for you. You have to get in touch with Bobby Altoff. She gets these like one-on-one interviews with him.
Yeah.
They just did another one. It was equally.
They were in bed together.
It was as pointless as the one before, but maybe more
Shred,
pointless.
really?
But the point is
it a
get her
holiday
by
on
the stock
Tuesday?
because
What's
he
Tuesday?
follows her.
Right.
So you got to think about it orthogonally.
Right.
Am I saying that right word?
I refuse to learn what that word means. I hate that word.
Orthogonal to Drake are the people
Veterans
that
Day,
you know have
bank
some
holiday.
way of being in Drake's eye.
Yep.
And so I
That
would
sounds
think
about
like,
right.
where do you see him dropping likes? or where do you see him? Actually,
I believe it, Shiz. I probably missed it.
Media, which
I believe it.
The last mystique left.
No, I get
about
it.
him at this
Yeah,
point.
yeah. Thanks.
But he does.
It makes sense. That's what happened.
God knows what reason. I want to ask you about some of your new.
What was the most recent holiday with things juiced and no one could get in?
To spend on these, and I want people to follow you so they can learn
There's
more
a Fed
about
rate
them.
pivot or something.
So we'll do like a mini lightning round. But before we do, are these all potential 100-baggers or not necessarily?
Yeah, I mean, I don't.
You won't buy something now.
Nothing goes into my portfolio that I don't feel has the possibility to 100x.
Is that gangster?
Now it could be 4 years, could be 5 years.
Shaking your head.
I mean, that's one word to describe it.
Why aren't you an active ETF at this point?
I don't know. People have asked me that.
Well, I guess. You
Matt
saw
Tuttle,
Dan Ives hit $1 billion the other day.
Yeah.
Where's Tom Lee? $2 billion.
Yeah, he must be with
Granny.
Granny.
You're telling me you couldn't have $500 million under management with a strategy like this? If everyone just says I'm putting $1,000 in, let's see if Eric can turn it into $100,000.
Right.
I'm just saying.
Yeah. No, there's a big retail following.
All right. Here's your stocks. We did Open Door to death. Better BETR.
Right.
What is this?
Well, actually, I think this is going to be the poster child for why AI is not a bubble. So they're a mortgage originator. And if you've ever heard of them, you probably heard that the CEO was the guy who fired 1,000 people on the Zoom call.
I remember that.
In December 2021.
That social clip.
And so it became like a DEI thing, like, oh, you're
radioactive.
Ruthless Wall Street CEO, didn't care, and fired all these. Well, the truth was, Better, mortgage originator went from a $55 billion a year run rate at the beginning of 2021 for mortgages that they were originating to $5 billion by December of 2021 after the rate hikes.
Right,
so if your business drops like 90%, like you are going to need to like cut costs. He had 1,000 people in India that were basically pushing paper around in order to send out commitment letters so people could, get mortgage offers from different places.
He made the company untouchable, which is why it sells off.
So, and then it took a while for them to SPAC because like they got slow rolled at the SEC because they thought it was a DEI kind of issue and stuff.
Oh, it wasn't public yet.
Yeah, it wasn't public yet. Anyway, the stock immediately sold off. SoftBank owns like 17% of it.
Oh, go figure. Hey, look who sold PayPal today.
They had started 10 years ago building an AI team to kind of automate the whole process, but in 2021 it was still too early. They still had to rely on humans. And the funny thing is, when I started doing the research that year in 21, they could have done over $240 billion worth of originations, but they just physically didn't have the people to push the paper around to do that. So anyway, they fired all those people. They decided to kind of refocus on AI. The guy who actually built their original matching algorithm at Better was the guy who built the Spotify music matching algorithm. And still is, he's responsible for 82% of the code that still runs at Spotify. But he came to Better to kind of build this mortgage matching algorithm. Now they're ready for prime time. And they don't need all those people that they used to employ before.
All right, so it's a working business. It's not a pipe dream. It exists.
It exists. It's like a player.
How much revenue they do?
And what we're going to see, like their earnings are next week. We'll see, just like we saw with Rocket a couple of weeks ago or whenever they had earnings, does a little blip down in mortgage rates translate immediately into increased volumes.
Yeah.
And so thinking ahead, like what might
Why did I get filled right on the ass on a 25-cent spread?
Right now, they're
suck me sideways, man.
Something like I'm trying to think of their market.
Give me a decent fill, just a one time on the one time.
But I don't know what their revenue is. But they're one of the, they've just got forgotten about as a SPAC.
Okay.
And so they basically now
I hope
have
this
to
didn't 1 minute cock. I'm just getting
prove
wrong info
that
here.
they don't need these people to kind of
that they have a
run their
mousetrap
business.
and it's automated and it works.
Yeah.
Okay.
Exactly.
Every time I turn on CNBC and I see the ticker going by the bottom, I see this IREN stock. I still haven't bothered to learn what it is. I know people have made a ton of money in it, and I know it's like one of the most actively traded names on Robinhood. What the hell is IREN?
So Iron and Cipher, you probably heard of CoreWeave, because CoreWeave is
it
sort of
Iris Energy or not?
That was their original name, and now they sort of just go by Iron.
Okay.
So CoreWeave has been one of the most successful
Stop!
IPOs just in the last year.
Motherfucker!
Last March. And they were seen as another AI
What is that?
Data center play. But the funny,
I knew that one was going to work because of how bearish I was.
How do I do this shit?
came out at 40, went to like 160 or something.
I was about to look at you so sideways.
Yeah, no,
Soon
I knew
rejects.
because I hated it.
Right when I go long,
what's
dude's got to stick his head in here and say, "Hey, SJ,
middleware player stuck between
doorknob
the
time."
Metas and the Googles, the hyperscalers on top, but they actually don't own any of the data
It's
centers.
headline on the
themselves.
wire.
They don't own
GOP
the
senators
land,
have
They
denied
don't have the connections to the power grid.
Senate Democrats
they have
offer
to
on
go
HCA
to
subsidies,
the Irons and the
airline
Ciphers
stocks.
or the Core
Yeah,
Scientific.
you'll warn me fine. I agree with you. But does it have to happen within 10 seconds of me taking a long position?
Deal with a big hyperscaler, they've got to turn
Good
around and
God. My
Iron
luck, dude.
actually owns the data center and CoreWeave is leasing it.
They don't partner with each other, but I'm saying that CoreWeave, has to do deals with Iron and Cipher because they wanted to position themselves as we're asset light. We're
so
like
somebody has to physically own it.
high margin. So we don't get into the weeds of owning that land. But it turns out that actually owning that land, having the connection with the local power authority, utility, and at a fixed rate, by the way, like that's critically important to, being able to deliver the kinds of gigawatts that now these hyperscalers
So this
need.
is a land or a facility owner?
So they buy the land in, Iron and in West Texas predominantly. They've got like 2 huge sites coming online where they actually bought the land. They negotiated the deals for the power consumption rates. And then they started physically building out the data centers themselves before actually then going to the hyperscalers and signing
$2,000
deals
loss.
with them.
Okay.
So they're kind of
Like
coming
that.
out from underneath of CoreWeave and almost like disrupting
Where's the
CoreWeave.
stock?
Holy shit! The
$50?
stock was like $5 in April. Now it's 67.
Yeah.
So I bought.
How have you owned it?
I started buying it at $9.
Wow.
Do you still think it's gonna 100x from $9?
To from 9 to 900.
You think so?
So it's now at 70 something, I think, or something. Low
So
70s.
$18 billion market cap. And you think
All
it's
right,
got
wait,
another
hold on.
10x?
Don't interrupt the process by which I make money here.
Yeah.
Cipher's the same thing?
Same thing, but smaller.
All right.
But the thing that's big about both Iron and Cipher is that the reason why I liked them as opposed to a Core Scientific or some of these other players that are out there is that Iron and Cipher have 3 gigawatts in their pipeline that are going to be turned on or energized in the next 12 months.
Like it's under contract. We know they're going to have it.
So when you hear that Microsoft's saying, "Oh, we're going to spend more money on capex to build out more data centers," that's probably like 5 years away for them, right? Because they got to go out and they got to buy the land and build the data centers. So they're going to be looking to do deals with people that actually have access to the data centers now. So when I was buying it at $9 or Cipher, I was buying just below $4. Like people were saying, "Oh, these guys are just like former Bitcoin miners. Who cares about Bitcoin miners? Those traded at a low PE and all this."
Is
kind of
that
stuff.
what they did though?
Yeah,
They
that's how
transitioned from
started.
Bitcoin mining to this?
Yeah, so they learned from how they built out their data centers for running
All right.
Bitcoin
Hut
mining.
8 was a Bitcoin miner. Is it still?
It is still,
Okay.
and it has a new partnership with
This
the
is
Trumps.
HUT guys.
Yeah. So they partner with there's a new ticker called American Bitcoin where they own 65% of it.
I
the
only buy
Trumps.
American Bitcoin.
And so Eric Trump and Don Jr. are kind of JV partners with them in that. But their basic Hut's main business is similar to Iron and Cipher, where they're building out all these data centers.
So
as well,
you like
looking
this?
to do
You like
deals.
this theme because
It's
you think-
basically the energy shortage theme.
Okay.
That like there's not enough to power all these queries for ChatGPT.
Okay. Sana Biotechnology, SANA. This company is working on a cure for restless leg syndrome, I'm told.
Type 1 diabetes.
Same shit. All right. This is a 100-bagger?
It's a
biotech?
It's a $1 billion stock today. So to go to $100 billion,
That's a lot.
They would have to prove, they've basically shown that they've taken a stem cell, approach to kind of developing drugs. And the first application of their particular approach to stem cell research was in type 1 diabetes. And they had good animal results, but just earlier this year, they showed in a very small handful of humans, basically they cured them of type 1 diabetes. So type 1 diabetes.
Cured, not treated.
Yeah.
Cured.
To this point where
Okay.
what they developed was able to help these people develop the ability to produce more insulin, which is what goes away, which causes type 1 diabetes.
Who do they have a partnership with in large pharma? Anyone?
No, nobody yet.
So that's a big catalyst when that happens, right?
That, and also they've got to go through the
rest of
process
the clinical trials,
showing like on a bigger scale and a human scale.
What does Feuerstein tell you about it? Does he like it or
who? First, no, I haven't spoken with him. I've spoken with others, and one of my sons actually has type 1 diabetes. So, like, I've been, so I've seen firsthand like what it's like, and 100 years ago, I mean, anybody with type 1 diabetes would be dead basically within a few months. So it's a huge market opportunity.
I like that one. I want to make sure we get to the rest. BTQ Technologies.
So it's a quantum play.
Next.
It's post-quantum cryptography. So basically, if you, everybody else out there is sort of building quantum computers.
Post-quantum?
So the thing about quantum.
Just buy it. What's wrong with you?
So last January, Jensen Huang said, "Oh, I think quantum is like 30 years away, right?" And now everybody's saying, "Oh, actually, including
more."
Jensen.
Well,
didn't you just buy it today?
Yes.
And then he's like, "All right, sorry."
And it was self-serving too, because guess what? Like if a quantum computer really was developed, a QPU would displace GPUs that Jensen sells as kind of the new kid on the block. So you have these like small little startups like IonQ and Rigetti trying to build their own quantum computers.
Even smaller than those?
Well, they're trying to be you'll like this. They're trying to be the CrowdStrike for quantum. Ooh. So they're basically trying to prevent a quantum attack.
All right,
because why would you want to prevent a quantum attack?
Oh, it's because cybersecurity for the quantum age.
A quantum computer could hack into everyone's crypto wallets and basically steal all the.
The only way to fight a quantum computer is with a quantum computer.
Right.
We all know that.
So that's what they do.
All right. We'll check in on that a couple of years from now. DeFi Technologies, DEFT.
Yeah, I've been in this one a year and a half. Started their core business is they basically sell ETFs for crypto all in Europe, and so not kind of a slow growing, not exciting business, but they are just now getting into using their knowledge of how they can create these kinds of crypto related instruments and get them listed on exchanges. So they're actually trying to tokenize all the sovereign debt in the world, which hasn't been tokenized as yet. So it's a super small market cap company, super big ambitions. Maybe it'll work, maybe it won't. It's obviously like a big asymmetric payoff here.
I don't think it's going to work.
Last one.
They have the knowledge and ability to kind of do it and going after it. So that's why I like
you say Ether and ETH Adjacent Scaling is a company called
Sana,
ETHA. It's just a public company. Is it a treasury or it's something else?
No, this is just the ETF, like the BlackRock.
Oh, this is the ETF
for ETH.
Oh, ETHA is the ticker.
Yeah. So it's just
you.
a bullish bet on Ethereum.
Why not just buy Ethereum? Why buy the ETF?
Well, I would say like wait a month or so, and there's going to be a Gen 2 treasury stock, hopefully trading called EMJX, which is mine, which will be multi-asset, including Bitcoin and Ethereum, and some other Carvana coins that will be part of our treasury.
We'll have you on. We'll have you on to talk about that. I guess the question is, would you like to hire me as your business manager? Well, let me pitch you the idea first. This is like
you're gonna get me into merch.
No, we're gonna go so far beyond merch. You know how we're like in this moment where the more extreme version of something is the one that wins versus the more moderated. Look who we just elected mayor.
Trump.
Trump too. Yeah. Both sides. It's just whatever is the loudest, most extreme, craziest shit that people would normally be like, that'll never happen. That's the thing that happens. Like,
oh my gosh, UAL, I hate you.
That's
now you're back up, huh?
On the street feel about the world that we currently live in today. There are some like scientific reasons for that, including the internet just the ability to amass huge followings for things that stand out. So, all right, we all understand that concept. You could have like the first meta meaning like almost like ironically, like an in-joke. You could have the first meta active ETF. We literally call it lottery. And no, but you see your reaction? This is the problem with people today. No, you see your reaction? That's the reaction I want. Guys, my new active ETF, it's a collection literally of lottery tickets. Mm-hmm. Get long this thing with money that if it goes to zero, you don't care. If you got 1 million people to put $1,000 into this, you would have one of the biggest active ETFs in the world. And that could be your base of capital, the way that Buffett has insurance premiums and different people do fund of funds and they get consultants to send them money. This is how I get money for my ETF. I tell people it's literally a collection of lottery tickets. Some are 0, some are 100 baggers, some are 500 baggers for all I know. But this is explicitly what I'm doing.
Yeah, no, it's.
Don't you think that would be a hit?
Yeah, I think so. And
the SEC doesn't care right now about that. I feel like.
Well, I don't think there's anything wrong. It's a venture capital model applied to public stocks.
Yes, and you're telling people you're probably going to blow up.
Look, if I have 10 investments,
it sounds like he's on board.
If I have I'll make the case. If I have 10 investments, okay, and one is a 100 bagger. And the rest, a few.
Sounds like the ETF me in the ass viewer fund and retirement fund here.
7 go to 0, which never happens for public stocks. I'm still sitting on a 10x in my portfolio from my 100 bagger in one position, right? So that's the value of slugging percentage.
But you need one. But you need one of those. But you do need one of those.
Yeah, and
they think they're geniuses.
Like Carvana was a fluke, and it'll never.
Prove them wrong.
How often can you find a 100 bagger? So I remember I tweeted at one point, like I anticipate or I hope to find one of these 100 baggers every six months or something, and people were like, 6 months, come on! Who does this guy think he is?
That is insane.
Yeah,
100 bagger every 6 months.
How many do we have now? Like we've got it. Like
I don't know how many companies.
How
many companies ever 100x from single digits? It's got to be a tiny number. It's not a big number.
No, and it's getting harder and harder the more the open AIs of the world stay private.
Yes.
It'd be easier in the 98, 99 when the Globe.com was IPOing with no revenue.
But what I'm saying is like people are willing to. Look, we see people doing 0 day till expiration options in record numbers. People are doing lottery tickets already. They're doing more sports gambling than they are retirement investing.
Right.
So we can't change the world. We can feed the public what it wants.
I mean, that's one thing I'm trying to do with this whole rising dynasty thing, like and communicating with this middle class, open army folks that are following is it's like, don't waste your money on these sports betting. Don't. There's so many ways.
Waste
zero
your
DTEs.
money on my penny stocks.
Zero DTEs. No, Carvana good. Open Door good. 0 DTEs and sports betting bad.
Okay.
Is sort of my message.
So you're telling people, all right, I get it. You're going to gamble because you're middle class and you don't see a path to yourself.
But they're telling me they're doing this anyway.
That's right.
I get so many messages from people saying, hey, I'm an electrician, I'm a pipe layer or whatever. I had a guy who's like a painter, like he paints houses and stuff, and he was saying like I spend 3-4 hours a night studying stocks, and we had a debate about.
Is that your painter?
We talked about we talked about post quantum cryptography in this BTQ.
Yeah, it must have been a fascinating conversation.
And he knew more about it than I did.
Before we wrap, so if you were to launch the lottery fund, okay, and I'll just give that to you. You could just have it.
Yeah.
I want a board seat. All the traditional media, this is the top. Barron's, Financial Times, they would point to you. This charlatan is selling people $1 in a dream.
Grifter.
You know how much money you would raise because of that negative press in today's day and age? The press doesn't even understand that it works this way. We understand it.
I had a coffee with Tim Sykes.
I'd send him $1,000
a few months ago here in New York, and he was like, this is great what's happening with you and Open Door. You got all these haters. You got like Martin Shkreli coming after you and all this. It's perfect. You want that. You want the energy, because when the energy is there with the positive and the negative.
Strong feelings.
It's people are paying attention.
They care.
All
right, dude, I wish you luck, pal. No, listen, I wish you luck. I think... You cut me off again. This is going great, guys. I think what you're doing is super interesting. I love it. I love that it's working for you. I hope it keeps working for you and your army. And I'm a fan of yours personally. And to see you finding professional success doing something this much fun, I feel like it's cool. So
I appreciate it.
If I've ever given you the impression, thank you guys. If I've ever given you the impression that I don't think it's cool, that's not the case. I'm rooting for you. You know I am.
It's all good.
All right.
Yeah,
how do you
guys.
How do you feel?
No comment.
No comment at all? This will end in tears? You could say it. One of us should probably say it just to hedge the show.
I mean, I think a lot of this shit is nuts, but I hope it works.
Well, it's
He's saying
so
it. Yeah,
far.
good. It is. I hope it continues to.
A lot of the stocks are nuts, or a lot of the philosophy.
The post quantum. You lost me at post quantum. I hope it works. I want people to make money, so I hope it works. I hope Open goes to 81, 89, because that would be the funniest thing ever. I'm kidding. I hope it goes to 82.
All right. Now, we always end the show by asking people what non-extradition country they're planning to visit when their portfolio blows up. What are you thinking? Panama? What do you got in mind? Dude, what are you looking forward to? Tell the audience.
Well, I'm
Drake finally buying the stock.
I'm looking forward to the Open 82 party in Vegas. So now that's become like a meme unto itself, and like people have made AI videos.
What is this?
People want to have a party when Open Door hits $82 a share.
Oh,
and then they were debating, should we do it in Tokyo, LA, but Vegas won, and then so somebody I got on Sora or one of these AI video generating sites and created like a video of like Drake and Eric and Keith Raboy and like all these people. So, I think that would be pretty cool. People have told me like, well, I'm flying in from Antarctica. I'm flying in from Mongolia.
The party will, so I'll tell you how it's actually going to go. Drake is promoting Stake, which is a gambling app. Drake is not afraid of controversy in any way, shape, or form. He actually courts a lot of negative attention, especially these days. He thinks he's a super villain. Drake is going to buy the stock. And the ads keep the haters away. Vegas at 82. It's going to be.
And actually, I don't set them. I haven't set them in forever. I can't remember the last time I even set the ads.
Even if
you can thank Twitch.
Doesn't go to 82. I feel like you'll still be pretty satisfied.
And if you hate it that much, just
and then you could get
subscribe
Drake
or
and it all comes full circle. All right,
go take a piss break.
I'm afraid for you, but I'm rooting for you. And
everybody has this Twitch Prime.
I hope
use it here.
A lot of money. All right, that's it.
It's a win-win for everybody.
I want to say
or ad blocker. I mean, there's 1,000 ways around your problem.
John, Duncan, Nicole, Rob, Chart Kid, Matt, Sean. We've done some incredible. Daniel.
Go to Kick.
Who else am I leaving out? Graham.
There's no ads over there.
Travis. We've done some incredible work this week on video, guys. Animal Spirits on YouTube every week. Hits so hard. What else? Ask the Compound has been good lately. It's always good, but especially good lately.
Taking off.
Yeah. And last thing I want to tell you about is the ownership channel. So we have a lot of markets conversation on the Compound. The ownership channel is about what wealthy people or business owners or founders or employee shareholders of companies actually do with their money. Not trading, but really more about just the process of being wealthy, becoming wealthy. What are the right things to do? We have an awesome interview up with John Chaffetz from Timberlane. If you haven't checked out the ownership channel by Ritholtz, now would be a good time. We'd love for you guys to watch it, give us some feedback, tell us what you think. All right, that's it from us. Thank you so much for listening and watching. See you soon.
Mm-hmm. I think I'm green, actually. I don't actually know. I think I barely pull out a Green Day if with today's loss. Okay, we're at $4,000. Currently down $750. I'll tag it. Slow week.
Woke up naked, limit filled, broker texted, bro, you killed. Fax my gains to my ex just caused, then snorted stems off compliance. Got scared on a G-Wagon, tried to shorten the sun, ended up dragging. Bought the top, sold the rip, lit a blunt with the 10Q script.
Yeah, we throwing phones, yeah, we yelling, feel me. Tore my suit while riding silly. HR quit, we threw a milli. It's a thing we go wild. Screens glow red, but we still smile up. 10 bands in a single trial. I made my ticker wedding style. It's a thing we go wild. Trade desk thumping, vibes compiled. CK on hold out, toned out. We making legends, not just files.
Told my CPA do the math, she fainted halfway through my path. Private jet just for lunch. Blew 6 figs on a power crunch. My intern cried, said this.
Where are we at on the day? I thought we were down like $2,000. Oh, it's not terrible considering that one trade dicked my entire day.
Spilled tequila on my Bloomberg screen, made it rain on a Zoom. Now that's obscene. HR filed a form, I lit it, bought a silence with a candle lit. Spot split my tick, I'm on the chart. Said yes, whole desk look like a rave in distress. Final bell rings, we reload clips. Party bus park next to my puts and dips. Snorting blow off the ass cracker short sellers. Lewds like candy, we some rich fin fellas. Ran 3 laps around the house, butt naked. Neighbors caught
We're gonna raid Mr. Marbles. I gotta run, otherwise I do Marbles myself today. I have some errands I gotta run before shit starts closing up. So I know you guys like the Marbles, so I give you the man, the myth, the legend, Mr. Marbles himself. Decent week, nothing to write home about. Got a swing that hopefully we get a government deal next week. I think there's going to be something done before Thanksgiving. I think neither party wants to dick with Thanksgiving. That's my thing. That's my theory. You get government opening up, and you got NVIDIA ER. Oh, that's where we're going. Y'all have a good week. Hit me up in the DMs if you want. I'll be in Discord for a hair, and then I'm out.